All right. Hello, everybody. Welcome back to another episode of The Market Close. We are live. It is Thursday, December 18th. We got two earnings today after the bell, Nike and Fedex. So we will get into that as soon as market closes, and we'll see what numbers they can put up. Both of them have to deal with consumers. FedEx when it comes to shipping packages, Nike when it comes to selling clothing and shoes. And we'll do a little bit of a preview before we get those earnings and see what we got going on. In terms of the market action today, it's been a bit of a weird market. Bitcoin right here is down $2,000 in the past, call it, just hit 84. Wow, 84.9 in the past hour. And I think when I left in the morning, it was at 89.4. So, I mean, just an unbelievably choppy market action. NVIDIA right here holding 2%, but in the morning NVIDIA was at 178. Palantir's actually done one of the best jobs today, holding 5%, 186 right there. Robinhood has tried so many times to break through 122, right back down to 117 after getting to that 123 level, or actually got to 124.25, came right back down to 117. So still up on the day, but flat for the week. SoFi actually doing a good day, holding up that 2650. Meta having a good day, was pushing 670, now it's 665. BMNR and MicroStrategy are down because Bitcoin and Ethereum once again have come down. I think the sort of way a lot of people have been thinking of this market is just incredibly choppy throughout the entire day. S&P still holding a 1%. It doesn't look like we're going to get that 680 close. I mean, we got 13 minutes. Maybe we get above 680, which would be very nice to see. But 678, I'll take it. That reverses the entirety of the move we had yesterday, although we were getting a lot more in the morning. But that has come back a little bit. There's a couple of different headlines that potentially could have caused a little bit of the micro sell-off you're seeing in some of these names. But regardless, it's an overall green day in terms of a reversal from yesterday. Broadcom right there up 1.4%. Rocket Lab up 11%, pushing 60 again. That goes green. Apple green, Oklo green, Amazon green, Netflix, Oracle, CoreWeave, a lot of those names that got hit. The data center plays, IREN, that's green on the day by 7%. Nebius, that's up by 4%. It's not a bad day. It's not a bad day. It's just a choppy day because you've got some sectors of the market like crypto, which are super high beta, that are getting hit. Rivian, 14%. I didn't even see that today. Wow, look at that. Rivian breaking through 20. Variety of different small caps getting some momentum. Tesla, once again, trying to break 490. 488, 495 was a 52-week high 2 days ago, and trying to get back there after falling to 467. So, I mean, the space theme continues to be intact. ASTS getting a 6.7% move. Rocket Lab getting 11% move. But these names are super up and down, right? Throughout the entire week. Rocket Lab was down 8% yesterday, up 11% today. SoFi was down 7% yesterday, up 5% today. NVIDIA was pushing below 170 yesterday. Now it's holding 174, but down from 178. So again, there's not really a lot of logic to how this is playing out. I think you just have a bunch of different jitters and a bunch of different people selling, tax loss harvesting, et cetera, across the entire market. The general trend from this morning, which was one of the most important trends that we've seen in the inflation data after a long time, even though there is a little bit of skepticism of how the inflation data was calculated. But if you move past that part of the argument, 2.6 versus 3% expected on CPI year over year. Core CPI 2.7. No bank expected it to be even close to 2.6, 2.7. The fact that we got there was a big jolt for the morning. You definitely had a bit of a sell-off when people started questioning the legitimacy of those numbers. But all in all, you're seeing the market that's happier than not about those numbers, which is very nice. The BOJ rate hikes are going to be happening tonight. We're going to see what happens when the BOJ, hikes rates. I think it theoretically could be priced in, but some of it might not be priced in. So we'll see what happens later today when that does happen. That'll be at night. And that could also be a reason why crypto selling off, because one of the first things that gets sold off outside of bonds when we hike rates is crypto in terms of a risk on asset. And so that could be another reason why Bitcoin is taking a little bit of pain right there. In terms of the other headlines we had today, so we had a couple of different things going on. Again, we got two different big earnings after the bell, and then we'll talk about those earnings. But market's been choppy as usual, although we likely will end green. The wheat stocks are red, which is weird, but I guess it ended up being a sell the news. MSOS, the wheat ETF, down 24%, even though Trump kind of gave them what they wanted to see.
Today, I'm pleased to announce that I will be signing an executive order to reschedule marijuana from a Schedule 1 to a Schedule 3 controlled substance with legitimate medical uses. We have people begging for me to do this, people that are in great pain. For decades, this action has been requested by American patients suffering from extreme pain, incurable diseases, aggressive cancers, seizure disorders, neurological problems, and more, including numerous veterans with service-related injuries and older Americans who live with chronic medical problems that severely degrade their quality of life?
So, although there are different stipulations to this scheduling of marijuana as a class 3 drug, aka the medicinal purposes of it are more important than the recreational aspects, you would think the weed stocks wouldn't fall off that badly, but nonetheless, they're getting hit. So again, the rumors of the nature of the executive order was hyped up a little bit too much over the past 2 weeks, and the reality of it hit today. Still a good thing for the weed industry, but not as aggressive as what the market had expected. And so that one down 24% on the day. A lot of those other weed stocks are getting hit, but still relatively good for the overall industry. Tilray right there down 5.9%. Rocket Lab did push 60 in the past minute. Let's see if we can get that close above 60. 11% on the day. Robinhood 117, BMNR 2860. That's down 2%. Palantir still holding 185. Amcor, that's up a little bit on the day. Grab up almost 2%. Micron, great day. Not at its all-time highs, but phenomenal day. I was looking even deeper into the Micron earnings, and just, my goodness, they were exceptional, to say the least. So Micron right there at 250. By the way, Chris will be on at 420. We will get into macro Thursday. We had a lot of stuff to go through in terms of today's CPI. So we'll be talking about potentially deflation as a bigger concern than inflation, and we'll get into that. But we will get through the earnings for FedEx and Nike as well. Now let's do a poll in the chat. Which one do you think outperforms, FedEx or Nike? Let me know if anyone owns FedEx or Nike. Last time I did an earnings play on Nike, I think I made like $100, so it wasn't anything crazy. I mean, if I had to guess, I think Nike pumps simply because of the idea that the retailers are pumping. So if Lululemon, Abercrombie are selling their clothes, I mean, if you buy some really good jeans from Abercrombie, you probably want to match them with some really good sneakers from Nike, right? Like, just if the overall retailer trade is intact and the consumer is not that bad, then I think Nike will be okay. FedEx is a different question because Amazon is eating their lunch in terms of Amazon's vertical integration. And they're definitely, we saw that in UPS's numbers. UPS also having to deal with 48,000 layoffs. Those were the October headlines for UPS. So not sure about FedEx, but if the consumer trade is intact and the retail trade is intact, you need a company to deliver all those packages direct to consumer. That's where FedEx comes in place. So I don't know. I think both could be okay, but it's hard to take a really sophisticated guess and then make an earnings play on this one. So which one outperforms? We have, let's do Nike pump, FedEx dump, FedEx pump, Nike dump, both pump, both dump. What do you think is more likely in these four scenarios? I think a lot of people own Nike, right? This is a big one. It goes under the radar, but this is a big cold stock. There's a decent chunk of people that love Nike. And so I'm rooting for it. Let's see if we can make it happen. FedEx right there, that's up 1.62%. An insider did buy shares at $62 million worth of it. So Nike right there up a little bit on the day. Now, what does the street want for these numbers? The street's expecting 38 cents of EPS and $12.2 billion of revenue for Nike. FedEx street's expecting $4.11 of EPS and $22.8 billion from FedEx. And so in the next coming minutes, we're going to see if these end up playing up. Okay, so those were some of the previews on FedEx and Nike, and we'll see those earnings in a second. Some macro stats as we get into the close. People are indeed taking some profits. So take a look at this. This is from Bank of America. U.S. equities last week saw $3.6 billion in outflows, marking the 9th week of net selling over the last 13 weeks. This came out with $4.9 billion in single stock outflows, the 6th weekly withdrawal over the past 7 weeks, which was partially offset by $1.3 billion in ETF inflows. So you're seeing more single stock outflows, which makes sense. People are booking their gains, even though you're seeing net ETF inflows as people potentially could be just transitioning the money into something safer. ETFs have now been bought in 32 of the last 34 weeks, which is why the S&P, the Qs have held up. And hedge funds sold about $3.5 billion, bringing their 4-week average outflow to negative $900 million. Retail investors sold negative $1.5 billion, marking their 6th consecutive weekly sale. However, institutional investors, which are not necessarily the same as hedge funds, those are more like long money managers, they bought $1.4 billion, posting their 4th consecutive weekly purchase. So retail sold for 6 weeks in a row, including last week. Hedge funds sold for 4 weeks in a row, including last week. Retail sold $600 million more than hedge funds. And institutional investors bought $1.4 billion last week in net single stocks, in net flows for single stocks. So I mean, you're seeing a trend of people wanting to take some profits before the end of the year. Obviously, retail probably wants to book their gains. Hedge funds want to also book their gains, and they also probably want to make sure they're ready for next year. Whereas if you're long only and you bought Micron at 100, you might not want to take profits after you saw those earnings, and you might want to keep holding on if you're an institutional investor, which is not that crazy. Now, this is also kind of consistent with actually, it's very consistent with the institutional investor fund manager chart that we saw yesterday, that cash levels on Bank of America's survey are at the lowest levels since 2008. They were at 3.7 last month. They're now at 3.3. So it makes sense that individual retail investors and hedge funds might be taking some profits, but institutional investors are going long, which goes to show that there are people buying the dip. It just might not be the same people that were buying the dip back when the dip was really lucrative earlier in the year. And so it's not crazy to see that playing out. Here's another chart on the Santa Claus rally, which I also thought was relatively interesting. So if you take a look at this, we never had 3 years in a row of negative returns from 56 years of data on this Santa Claus rally. And 19 years over the past 25 have been positive, 6 have been negative. So there's a 76% chance, if you're going over the last 25 years, of that Santa Claus rally happening. Today, I think, gave us a great setup with CPI coming in. It's just, again, throughout the day, even after CPI, you had some weakness. Bitcoin tanked $3,000, then it came back, then it came down. So you're just still waiting to see if the trend is higher. And, Micron earnings yesterday was amazing. That helped, but we might need a few more earnings to completely solidify this. Micron right there, 248. That's up 10.3% on the day as well. Oh, we had a bunch of companies join the DOE to support groundbreaking Genesis mission program. Palantir, NVIDIA, and Accenture, and a host of other companies have joined this. So the DOE basically came out and says, we are announcing a collaboration with 24 organizations to advance the Genesis mission. Remember, the Genesis mission is essentially the Manhattan Project that Trump introduced a couple of weeks ago for AI. So again, if you want to bet against AI, that's fine. But this administration is just really, really keen on making sure that we unleash American energy dominance. And the only way we would do that is if there's enough demand for that energy. And there is more than enough demand for that energy within these data centers. And as a result, you're starting to see a lot more collaborations from the government on that perspective as well. Crypto still red. Bitcoin and Ethereum, even towards the end of the day, a lot of these other stocks making somewhat of a move. Crypto not. I heard it. Wow, Bitcoin lows of the day, 84.4, just jumped up to 84.7. A couple of things I read today was that there are still more liquidations that are happening. I don't know why. I don't know how. I don't know how much over leverage there is, but from some of the things I read today, there was just like there's more froth in the system. I mean, like Bitcoin's down from 130 to 84, so I guess it's fine if there's more froth. But if there is, then I guess that leverage inevitably has to come out. But you've had a decent amount of it already come out. Netflix right here just went red. Apple at 272. Oracle holding on to a little bit of their gains today. That at least that's green. That helped Iran and Corey as well go green on the day. Maybe it's a little bit of a preview for the rate hike that could be uniquely affecting Bitcoin. And so that's why you're seeing a bit of a sell-off right there. But at the end of the day, we're going to see when Japan actually does hike rates, if that affects Bitcoin. The Qs right there up 1.4% of the day. Again, massive day for the Qs, being led by Tesla and Google. So really nice to see the Qs get some love. Tesla did touch 490 right now at 483. Nike right here up a little bit. Micron up 10%. Rocket Lab looks like it's going to close just under 60, maybe above 60. Hoodie at 117. Nebby is still a decent day, up 3%. And then Rivian right there up 14.5% on the day. Implied volatility move for Nike, I believe, is 7%. I believe it's 7%. I think it's 6 to 7%, I think there's a no, I'm kidding, it's 7%. All right. Thursday, December 18th, 4 p.m. The stock market is now closed. All right, we are done for the day. We got 1 day left of this week, and then we are done with the third week of December. NVIDIA, 174, up 2% of the day. S&P did not get that 678 close. She tried, up 0.75%. That's a great day for the S&P, but could not get above 680 and could not get that full 1% move at 678. So that one went slightly red towards the end of the day, but still green for the majority of the day. Palantir right there, 4.74% of the day. Amcor, 39.30. SMCI, that was down about 2% of the day. Broadcom, got a little bit of a move at 329, was not able to break above 330, bottomed at 321 during the day. Google right there, that's up 2%. Google and Tesla kind of led the day. PayPal once again went red because of the downgrade they got from Morgan Stanley today to $51. So that's why that got hit. The Qs, 1.45%. Green day for the Qs. Not too bad at all. I think Amazon also was green. Yep, Amazon 226. That was up about $5 on the day, which is not too bad. Apple was the only Mac 7 that actually ended up going red at 272. Money market inflows. We get that data today. Do we have it? We do have it. Kind of a nothing burger. 10.74 billion in the money market funds increase over the past week. 7.67 trillion on the sidelines. So still a decent chunk on the sidelines, but not a massive increase over the last week, which also makes sense with the institutional investor data we looked at. So less money went on the sidelines. A lot of this is probably just interest collected on the money that was already in these money market funds, and more money potentially being deployed in the equity markets. All right, Nike and Fedex. We'll have Chris on in 20 minutes. We'll dive deeper into CPI, inflation, what's going on with bond yields, what it means for the yen carry trade. Rocket Lab closed at 59.92.60 after hours. Let's pull these up. I think in about 2 minutes, we should get Nike and Fedex. And then we are going to take a look at the data that comes out here. What's up with crypto? I'm not sure, to be honest. Like, I read a couple things today. I'll have to read some more. I just started getting curious when I saw the $3,000 candle down. I was like, why is this happening? And the best of the information I got was that there's more leverage. I mean, at that point, you might as well say there's another glitch happening, but I don't know. I don't even think the crypto people, quite frankly, know why this thing is going back and forth as much as it is. Citibank, by the way, hit a new 52-week high. New York Times hit a new 52-week high. Toyota hit a new 52-week high today. Madison Square Garden, Hilton, a lot of these sort of either banks, Flagstar, FLG, Barclays, Barrick Mining. You had a gold miner hit a 52-week high. Wow, silver and gold actually were down on the day. Silver lost 2%. So not tech hitting all-time highs today, but some of these more value plays that are relatively less volatile hit those 52-week highs. FinWiz, let's look at the heat map. Tech led the way. Consumer defenses went red, financials went red, although some of the regional banks were green, and then tech. I mean, it was a green day for tech. It just wasn't enough of a green day to close 680 on the S&P, which is what I think a lot of people were looking for as well. All right, so these earnings should be coming in really soon, and then we're going to see FedEx and Nike. Again, I don't think FedEx is going to be super volatile. It could be, but Nike is the bigger one. Getting a little move after hours. The numbers should be in about a minute. And then we're going to see. Let me know if anyone did anything today, sold, bought, calls, puts, anything. If you did, I mean, it wasn't, I don't know, it just wasn't that crazy of a day to make massive, massive moves. I think you would have seen a lot more buying if there was a proper breakout. It's just every time you thought there was a trend, it got rejected on a lot of stocks. And so it was green. It just didn't end up being the type of green that I think could get a ton of inflows coming in because people would immediately move higher. Oh, wow. Is this true? Trump just signed an executive order on ensuring American space superiority. Is Rocket Lab still moving after hours on that? Yeah, Rocket Lab's moving a little bit after hours. I see a bunch of people saying bought Nebius, bought BM&R, sold some Broadcom, added Rocket Lab. Yeah, Trump just signed an executive space order on ensuring American space superiority. So that, along with the weed executive order, were the two things that he signed today. I'm seeing that right now. He signed it. Yeah, he signed it 30 minutes ago. I'm seeing the headline right now, but he signed it 30 minutes ago. Our boy Cleo Fields bought more Iran, by the way. He's going to be our new Nancy. He continues to buy more Iran. He added 15,000 to his Iran. He added 30,000 to Netflix. He sold CoreWeave, by the way. He sold SoundHound, and he added 500,000 to Google. So he added Google, Iran, Netflix, and he sold CoreWeave and SoundHound. And those were his moves over the past 45 days. HIMS was red. HIMS 34.73. That one ended red on the day. Amazon flat right here after hours. Apple, again, basically flat on the day. FedEx down after hours. The numbers should be coming in pretty soon. And then Nike, you're getting a little bit of a move right there. We should be getting the Nike numbers very soon as well. APLD, that one was another one of the, oh yeah, great day. Yeah, again, the data center names, when they go up, they go up. When they go down, they go down. So APLD was down like 15% on Monday. It's up 9% today. It's all of them kind of moving in tandem. And this thing was pushing $34 the other day. Microsoft right here at 483 as well. The other big news that happened last night was OpenAI looking to raise $100 billion. I think the street liked that. I think they really liked that, even though OpenAI's valuation is increasing, the fact that they're getting more liquid capital is really important because they can use that money to then spend on all the data center stuff that they want to put out into the world. And so, I mean, like, yeah, it makes sense that them raising money is a good thing. The question is going to be, you know, do they actually get the money? And then will the money be effectively deployed in the deals that they said they were going to do? This is another video that OpenAI put out today, and this was their response to a lot of people that were saying, oh, they're doing is creating AI slop. Their argument is, no, we're trying to do other stuff besides AI images.
So many people are worried about whether people are trying to do too much. I just encourage people to think about and consider, what if we're not moving fast enough? What if we're investing too little? What if we can't keep the amount of compute consistent with people's aspirations of how they want to use intelligence? That's something really important to think about. Think about what we could see as we put this into use in enterprises that are discovering new drugs, into higher education institutions that are educating more and more students, in small businesses that need help to figure out whether to add a new menu item or hire a new employee. This is all going to require a lot more computational power and a lot more intelligence. When you think about the investments in infrastructure, it's a bet on the future, but it's also a reflection of where we are today. If you talk to any organization, they'll tell you that the demand for compute is outstripping the supply. And it's really important, as you're seeing these infrastructure investments, to understand that they're happening in the context of a broader geopolitical environment as well. Countries around the world aren't necessarily going to wait for the United States to make these investments. You're seeing massive infrastructure investments, for example, in China to build AI infrastructure.
So again, they're trying to justify that we really, really, really need to pay attention to spending more on compute, which means hopefully they're going to get a lot more of this money that they raise and actually give it to Oracle, Broadcom, AMD, NVIDIA, et cetera, to build out their compute. FedEx earnings 3%. 3% on FedEx. Again, I don't like trusting candles after hours on earnings unless they're at least 5%. 3% easily get reversed. So let's see. Let's still pull up the numbers and see what we can get. Oh, the numbers look pretty decent. Numbers look pretty decent. Hold on. Let's pull this up. Looks like we got a beat on the top and the bottom and a guidance beat for FedEx.
Their notable revenue beat estimates by 3%. Biggest beat in 4 years. Profit also beating estimates, coming in at 482 compared to the estimate of 411. Biggest beat in more than 2 years. FedEx also raising both the bottom of its revenue and its EPS guidance. EPS now $17.80 to $19 with the midpoint above the estimate of $18.22.
Guys, this is a big beat. This is a big beat. 17% EPS for FedEx. FedEx is not one of those companies that beats by double digits, almost 20%. 482 versus 411. They beat by about 700 million on revenue, 23.5 versus 22.8. Revenue's up 7% year over year. EPS, 20% growth EPS. Those are like tech company EPS growth numbers. That is pretty damn incredible for FedEx. The move is not holding on the stock, unfortunately. Stock's trying to hold barely 1%, but that's a big move for FedEx. I wonder what the CEO says was the driver of that beat. Was it AI? Was it earnings efficiencies? Was it productivity going higher? Layoffs potentially? Like, what exactly got them that type of a beat? But that means something in their margins got better for that type of beat, because the revenue is not as significant of a beat as their EPS, so they had to get margins to increase in a meaningful way to keep that going. It's technically not holiday season for them because it's not Q4. So this was the past 3 months, not like peak holiday demand season either, which is why for the retailers, again, it was confusing for me as the general trend. It's not like people are going out buying all these clothes because it's the holidays. It was August, September, and July. It was summer. I guess you can say there's some summer seasonality, but that's nothing like October, November, and December. FedEx right there up 1.7%. Q2 revenue again, 23.4 versus 22.7. They're guiding for 19 of EPS versus 18.22. They raised the bottom end of their guidance, and they're still seeing 5 to 6% revenue growth year over year on their core revenue. Let's get a little bit more coverage on this. Nike should be out either now or in just a couple minutes.
Also raising both the bottom of its revenue and its EPS guidance. EPS now $17.80 to $19, with the midpoint above the estimate of $18.22. A little bit deeper in the numbers, look at the Express division. That's now both air delivery and ground delivery. Their revenues beat estimates, with ground delivery volumes up by 8%. That's in line with a lot of estimates from ShipMatrix that FedEx had gained market share in B2C. Also, pricing for Express up over 5% year over year. Speaking to that demand picture, Express, it also beat on margin, 6.9% compared to the estimate of 6%. In the release, CEO Raj Subramanian said higher yields on domestic and international priority were a driver and helped the company overcome the drag of grounding those MD-11 planes that we talked about in the last hour after a fatal crash and the end of the de minimis exemption on small items. The company had previously guided for $1 billion in costs due to that change. Also, the spinoff of FedEx Freight still scheduled for June of next year. And of course, we're going to hear much more about all of this from CEO Raj Subramanian when he appears on Mad Money coming up. John, back over to you.
I mean, it's a hell of a quarter for FedEx. That was not bad. That was not bad at all. Nike's up next. I guess that's 415 for Nike. Is that 415 or 430? I think it's 415. Yeah, it should be 415. All right, so we have a couple minutes. See what we have on Nike. All right, let me see what the chat said on the poll. But that was good for, I mean, that's good for the overall economy, even if it's not an AI trade. Seeing those type of core companies do what they need to do is really, really important for all of us to see. 34% of people said Nike pump, FedEx dump. 29% said both pump. 24% said both dump. Okay, so FedEx so far is not dumping. It's definitely not pumping. But 2%. That's not horrible for FedEx. How much is FedEx up year to date? I think it's positive year to date. Year to date, FedEx is 4%. Okay, now it's 7% with the after hours move. Dividend on FedEx is 2%. Yeah, this one's not really been the best name this year, but we'll see if Nike can do better. What's Nike's dividend? Nike's dividend's like 3%, right? Nike's divvy, no, 2.4. All right, so if you're owning Nike, you're not really getting a beautiful dividend. You're buying it probably for the turnaround here. You got to be owning it for the turnaround. Today we're going to see if we can get that turnaround. 10-year, where's the 10-year? Are we having that below 4? No, not below. It's basically unchanged from the morning, 4.116, but it is nice to see it not pushing 4.2 like it was on Friday. Why is the Bank of America survey cash level 3.6 versus $7 trillion on the sidelines? That is for fund managers. So the $7 trillion on sidelines is a lot of different entities that have cash parked in money market funds. But for fund managers, which is better of a read of like money if it's actually going up into the market or not, that's where Bank of America's fund manager survey says, yeah, more investors are buying the dip versus not. I mean, the lowest level in 15 years is pretty incredible. EOSC 1231, that's up 0.48%. Open Door up 0.16. And then CarMax, that's up 1%. FedEx as well, 1.17. Nike should be out any minute. And we're going to see what's up in Nike. Did you see that Derek likes VG? Yeah, Derek talked about it a while ago. He likes VG, likes it as an oil and gas play or an LNG play. But he's also, playing a long game here. He knows that VG is going to take a long time. Again, Chris and Matt have said it over and over and over and over again. You cannot expect VG to turn around tomorrow. So realistically, if you're buying this thing, I think you buy it and you go to sleep and you don't worry about, because you can drive yourself crazy worrying about the 50-cent incremental movements every day. Like, this is not a growth stock that is supposed to have 40% revenue growth and then completely re-rate. I was talking about it with Derek last night. He thinks like maybe in a couple of years this thing can double. So it's really, he's taking a long-term perspective, but he does like the LNG aspect of VG. Nike, what do we got? All right, we should be getting the earnings. We're red. It keeps going down. The candlestick is not going up, but I don't trust it yet. It has time to reverse. A lot of algos getting in right here. Numbers got to be mixed for it to immediately be a red reaction. Going down 2%. It's not a complete like 3, 4, 5% dump yet. It's like going back and forth. Well, it just hit 3%. It's about to hit 4%. Oh no, it might be dumping. But again, I don't really trust the 3% candles because they can easily reverse. The candlestick ain't sticking, that's for sure. Let's see these numbers. Nike, what do we got? What do we got? Wow, there's a big number. I don't know why that's red. I think that could flip green pretty quick. Depends on if the street likes it. 53 cents EPS versus 38 cents. That's a 40% beat on EPS. 40% beat. Revenue beat by 2%. 12.4 versus 12.2. That is a pretty aggressive beat. Now, again, EPS is still down year over year because this company is in a rebuilding stage. And so, last year's comps are still pretty tough to beat. But Nike right here, flipping green. It's not a bad beat. FedEx, 17%, not a bad beat either. The earnings call is definitely important for Nike because the earnings call immediately, last 2 quarters, he said something on the earnings call. One of them it dumped, one of them it pumped. So, yeah, the initial reaction isn't always the best thing for Nike, but you got that basically flat. Their gross margins did decrease by 330 basis points, 40.6%. So I guess that's your negative headline. There's probably a couple other things that maybe are not the best, but gross margins going down are bad. But a 40% EPS beat is not something I think the street should be upset about. Let's see if we can get some more coverage on this one. Nike continues to stay flat after hours, slightly down. Oh, no, now it's 1.3%. It's trying, really trying. Street does not care yet enough. Here are the Nike numbers as they put up a 39% beat on EPS.
The analyst estimate was 38 cents, so that's a big bottom line beat. And also a beat on revenues as well, $12.4 billion. The estimate was 12.2. It also represents growth of 1% revenues, which isn't much, but it was better than the negative 1% that analysts were expecting into this report. It looks like the beat is coming from better North America revenues. Remember, this is the home market, 40% of the overall revenues. Nike reporting looks like $5.6 billion on North America revenue, which was significantly higher than the $5 billion expected, about 9% growth there. On China, still a struggle. This is the miss on China revenues at 1.4 billion versus the almost 1.6 expected, and it's a decline of 17% on China revenues. What else can I tell you about what's happening here? It looks like wholesale was a bright spot. So remember, the 3 categories to watch in this report to look for signs of progress and a turnaround from the CEO, Elliott Hill. One of them was wholesale. One of them was North America. So far, so good on North America, and so far, so good on wholesale, which was up 8%, reported in currency neutral basis there. And that is, I'm told, a mix between the new relationships like Amazon that they're in and some of the existing relationships like a Dick's or a Foot Locker. But Elliott Hill came in and he vowed to repair some of those relationships and really focus on them and work on them. It's something that had slipped on the previous CEO. It looks like there's progress there too. And then the third area I was looking for was running. Looks like running is a strong part of these results. They continue to see growth in some of their new franchises like the Vomero running shoes. They launched the Vomero Premium. That did very well. They see double-digit growth when it comes to running. Inventories, also part of the story here. Inventories were down 3%. And according to the release here, it looks like that was primarily due to higher tariffs in North America. Remember, a lot of the Nike product made overseas, Vietnam, China, they're paying high tariffs. They told us last quarter that was $1.5 billion in terms of tariff impacts for the year. It looks like on margins, and the reason that margins are still falling is because tariffs and because they're still cleaning out inventories and giving discounts to try to clean out the inventories and make shelf space for some of the new products and new innovations. Gross margin 40.6%. That was actually a slight beat. A few things we're going to be listening for on the call. Nike always gives its guidance on the call. The tradition lately has been under this new CEO, 90-day guidance. So for the next quarter, but not for the entire year. So that's really what's been the trend here in the turnaround. As far as the quote in the release, I think it's telling here. Elliott Hill says, Nike is in the middle innings of our comeback. We are making progress in the areas we prioritized first and remain confident in the actions we're taking to drive the long-term growth and profitability of our brands. It's sort of a, this is a good quarter, things are better than expected, but a little bit of a curb your enthusiasm, saying we're in the middle innings of our comeback, not getting too excited. Clearly, Hill has to address China with those revenues coming in worse than expected. What a turnaround looks like there, how achievable it is, and whether there's any kind of time frame on that. And analysts will also be wondering about just a more sustainable inflection toward growth. Good sign that there's 1% revenue growth. And what's going to happen with margins?
Yeah.
Are they going to continue under pressure because of some of the discounts they're having to give to clear out inventories?
Well,
Pretty comprehensive on Nike. Again, for those that wanted a nice move after hours, you're going to have to wait until earnings now for what Elliott Hill has to say. But the initial reaction down 2%. Gross margin decline and then China miss is what's offsetting the massive EPS beat. EPS still down year over year, even with that beat. That just goes to show you how bad of a turnaround Nike has been, or at least how bad of a turnaround it's executed for, but how much hope and optimism there is that they can actually turn it around. I mean, this used to be a $120 stock. It's down 51% over the past 5 years. So there's a lot. I mean, Bill Ackman is, I believe, still long 3-year leap options. I think it's almost like $3.4 billion he has. And he sold all of his stock. He transitioned them to leaps. So he believes in the turnaround, but it just might take a little bit more time than expected. Nike right there down 2.53%. We'll see if Elliott Hill also cares about competition, right? Because the biggest bear case that I've heard on Nike is that there's all these new modern brands that are taking their place. I mean, maybe. And, they're not back to massive, massive hypergrowth yet, but they are somewhat stabilizing outside of China, and the China numbers, and along with gross margins, are probably why they're down. Nebius right there down a little bit after hours, Rivian down a little bit, ASTS down a little bit, and then FedEx is up 2%. So FedEx ends up going green. Nike ends up going red after hours. Now, the tariff thing is definitely a big deal. So this is an easy turnaround play along with ELF. I think those are the two ones that people are talking about the most around the Supreme Court reversing the tariffs. The problem is Hassett came out today and said, we have a plan if the Supreme Court reverses the tariff. So I don't think the Trump administration is going to go down without a fight in terms of making sure the tariffs are implemented. So Vietnam, China, a lot of those places still having to pay tariffs for Nike, but that might be consistent even if the Supreme Court ends up reversing it towards the end of the year. All right, so that's what we got with Nike and FedEx. It is indeed Thursday. So let's bring on our friend of the channel, Mr. Chris Patel, and dive deeper into these CPI numbers today, because these numbers were indeed the reason for why we got the massive move we got in the pre-markets. Ladies and gentlemen, Mr. Christopher Patel.
What's going on, sir? How are you?
I'm good. How are you?
The one thing I noticed about the CPI print today is just how many people were trying to discount the numbers and trying to basically downplay them. And a lot of people were saying basically that, these are manipulated fake numbers. And the chart that people kept showing, which I don't understand why it took like 2 seconds, but look at this. I'm going to share my screen real quick. So Gordon Johnson, who is, of course, the resident bear of the investing community, he posted this thing and he's like, of course, inflation collapsed when government stopped reporting data, blah, blah, blah. And it's like, yeah, bro, they didn't report because this is month over month. But dude, they did report actual numbers right here for November. All of them. They didn't report October, so you can't have a month over month. Like, it's dumb. Like, all the people showing this chart saying, oh, look, it's manipulated, there's no data, blah, blah, blah. It's like, yeah, maybe it wasn't collected in October, so you can't do a month over month calculation, but you could do it year over year, right? So year over year, all of this stuff is pretty accurate. So I don't know why people got so bent out of shape. The part that
before we get deeper into it, there were some people that said not enough, like either A, calculations happened, or B, the methodology on certain layers. Did you hear that critique? That's what they were upset about.
Everyone is trying to look at this, and the thing is, they're trying to rationalize their underperformance on the target, right? So people looked at it and this was way beyond what even the best analysts were expecting. So that's what scared a lot of people, saying, and so a lot of people, I think, were just trying to justify their own miss, really. Some of some news reporters were coming out and saying my rent went up 24%. What are you guys talking about? And a lot of people were having to correct them, saying, where do you particularly live where rents are up 24%? Because throughout the entire country, you're seeing rents flatline, if not decline. So what's going on here? I mean, there could be an argument to be made that some of the categories, could be volatile, and that could be pushing things down, just based on it. But I think the theme that I will go down with the ship on is that shelter is collapsing. Home prices are coming down. Rent prices are flat to going down in a lot of parts of the country. And so shelter makes up about 35 to 40%, depending on what do you look at in terms of like CPI numbers for people. And that's the most impactful spend for most people. So if you can get inflation, if you can get shelter down, the rest of it will start to kind of get there. So all the policy decisions that the Trump administration is making with regards to immigration and everything, I think the impacts of that are starting to show up, and it's showing up particularly in shelter, right? So, I mean, if you think about it, we've had almost 600,000 people deported, and then you've got another supposedly 1.5 to 2 million people that have left on their own, right? And then if you look at the number of people that are coming into the country, it's declined precipitously. So in terms of total migration, it's down. And then when you look at demographic information with the number of people, not having kids, our population growth rate is declining faster than people think. And so I think the need for additional housing, like everyone keeps saying, oh, we're undersupplied. If you just look on a per capita basis, we're not nearly as undersupplied in housing as people think. Now, there is definitely the impact of lock-ins, where people are sitting on 2.5, 3% mortgages that are like, hey, if the mortgage rate that I'm giving up is a 3% and I have to inherit a 6%, 7% mortgage, makes no sense for it to move. I think there's a lot of people that are in that position where they've got these golden handcuffs. Those people are the ones that are, gonna eventually have to make a decision, because if there's, I don't know if you know the statistic, but everyone moves roughly speaking, because of life changes, around every 7 years. That's the average retention that people stay in one particular domicile. There's very few people that stay 20 years, 30 years in the same house. And the reason why is because people have kids, people have divorces, old people, they pass away, and there's all sorts of other things. Sometimes the economics of the relationship in the household changes, where it could be a 2-income household. One person loses the job and now they can't afford the house anymore. They have to sell, even if they have a really low mortgage, and they might end up in the rental market. So there's, on average, it's about seven years. It could be extended out because of there's lock-in effect, to maybe 10 years. But overall, we're starting to get to that point. So from what I'm seeing, if we just look at the latter half of the decade, all these people that took on mortgages in 2020, 2021, where they were able to refinance, a lot of them are going to hit that wall in 2027, 2028, 29, 30, especially a lot of boomers, who basically want to get out of the home ownership situation. They're going to have to sell, and a lot more inventory is going to come on. So if you were to ask me, long term, what is going to be the state of shelter? With the current policy that the Trump administration has, plus the demographic changes, I think shelter is likely to underperform relative to its historical levels of about 3% to 3.5% per year of inflation.
Do you think shelter will be a significant driver of continued deflation or disinflation, or do you think it's enough, but it's not like the 2%? It won't get us to 2% as easily.
No, it'll get us below 2%, believe it or not.
Really? You think it could get us that low?
I think so. I think at some point it could anchor to probably the 0 to maybe 1% for a prolonged period of time. It really depends on the demographic changes of this country. Like I said, if you think about it, one of the reasons why Japan had this long period of deflation was because home prices, right? They have a shrinking population. We have a shrinking population. It's a natural progression that, there's not going to be as much occupancies. And if you don't have as much occupancy, then of course, naturally, the prices that people can charge goes down. And then it kind of creates this spiral, right? So we've got this giant wave of boomers passing away. You've got these kids who are so inundated with student loans and all these other things. And a lot of people, they, the size of the home households themselves are not big anymore. I mean, you're talking
No.
about a generation where people had 3, 4 kids. And then, now if you look at the number of people who have like one kid is actually not as much. And then, of course, because you're a single guy, this, the amount of people having active relationships is actually very low, right?
Yeah.
Household formation is very low. So the question is, who's going to buy a 4-bedroom, 5-bedroom house on a single person?
This is a really big point I want to underwrite for you as well, because if there's a shift in my generation on how you think of A, home ownership versus like renting, or B, starting a family, I mean, you're not going to need a 4-bedroom house if you don't have kids. Like that's naturally going to be deflationary for those prices, right?
Yeah, and a lot of people, they, especially our, like the generation coming under us, they're more centered on experiences rather than tied and fixed to a certain thing. I mean, home ownership, I've spoken to a bunch of people. They told me like home ownership's a headache on top of a headache, like one of my friends, he bought a home. It's like, I spend most of my week working and I spend my weekends fixing shit around the house, and I hate it. And I'm like, dude, that sucks. And my wife was telling me, someone on Reddit posted these boomers trying to sell homes. It's like 30 years worth of what is that thing called, upkeep, that they've never done on it, like deferred maintenance. It's like 30 years of deferred maintenance is being sold and saying, hey, pay me 4 times what I paid for this house. Yet when you take it over, you got to add another $100,000-$200,000 worth of like stuff just to get it to like livable standards. And then especially if you look at older homes, man, shit is breaking all the time. One of my other friends, I went to poker with him. They had like some kind of water leak in his backyard, and it cost him like $5,000 to fix it because they had to actually dig up the piping and everything. And I mean, this is not like a really, really old home. It's like a 30, 40-year-old home. But that's one of the things. So the whole notion that home ownership is the greatest driver of wealth, I think a lot of people are kind of like skipping that and saying, I'd rather be in the stock market. And if you look at some of the data that's been coming out about like total wealth of people in the country, they're more interested in, being more flexible.
Did you see the other stat, which is that the last time real estate ownership was stock ownership as a percentage of the U.S. household wealth was above real estate ownership was the last 2 big bear markets?
Yeah.
So do you think people are getting a little overzealous on the stock market as my path to freedom, or do you think it's a new generation and that's not gonna have to follow?
I mean, if the market crashes, then a lot of people are going to be in a world of hurt, but it's going to be a lot of people who already have assets too, right? So if you're telling me right now, Chris, like all these 20-year-olds, they've got a bunch of massive portfolios, I'm like, no, man, they don't have a lot of discretionary income. They're the people who are going to be impacted most by a downturn in the stock market is people who actually have most of their net worth in the stock market. Yeah, right. If you look at the 20 to 30-year-olds, they've never really had the discretionary income to really go in there that hard. It's going to be more impactful to the 50, 60-year-olds, 70-year-olds that have basically been working and they've got the discretionary income to save money and put it into the market. So I don't know. I don't know how the situation ends up working out, but this is where the young people, and I think this is where like the rise of socialism might be a challenge for the United States post-Trump. That's the notion that I'm getting right now, where so much of the promise of tomorrow has been sort of taken away from them, that they may rebel against the current system and they may end up turning against it and saying, I'm going to vote for the most crazy socialist like candidates that have like the most far left ideas. And that could theoretically, it could work out. It could not. I don't know. I'm not really a judge of.
Well, your point is exactly what Vlad said this morning on Bloomberg. He said the Trump accounts are really important because if we don't make people feel like they have skin in the game, easily they will start thinking the game is rigged. And so like he thinks it's actually a really important thing.
There's one problem that I see with that though, and that is that while the idea is sound, and I think it's a really good idea, the entry is terrible. Okay. What I mean by that is if this was implemented in like 08, 09, dude, this would have been perfect because people would have seen compounding of about 12 to 15% year over year for the last 15 years, right?
Yeah.
Versus right now, you're looking at a market that's very frothy. So if you put in a whole bunch of money right now and then the market takes a dump for the next 5 years, you're going to turn a lot of people off to investing.
Well, the good thing is
that's
those
the
kids will be 5 years old and they wouldn't know about it, hopefully.
Yeah, exactly. That's actually a good thing, But the point is, with a lot of these stimulus measures that are supposed to be coming in, like you typically want to stimulate the economy when things are bad, not necessarily when things are good. And I think this would have been one of those things that was like a missed opportunity where if this was 08, 09, where shit, companies were trading at single digit PEs, that is when you really needed to drop in a bunch of stimulus. And those kids during that time, they would have been right now 15, 16 years old, ready to go to college, and their portfolios would have been stacked. Right?
Could you imagine hold on. Could you imagine the TikTok generation having 100,000 in their investment accounts? Or I don't know.
That would be good. They wouldn't have student loans to contend with, right? They've been go to college right now. They don't have the student loans. When they get out debt free. I mean, imagine that, Instead, what do we have? We have an entire generation of kids who have college degrees that may or may not end up panning out to anything. They're indebted with all of this stuff. The prospect of home ownership is beyond their understanding. It's a pretty bleak world out there. And then also some of the demographic issues that like all of this income inequality is also causing the demographic issues as well, which I hope people appreciate, which is if you don't feel like you can buy a home, you also don't feel like you can start a family. And if you don't feel like you can start a family, like you're just basically living your life, but you're apathetic to dating, to starting a family and everything else.
So all of that combined with the trend we saw today, which is that again, CPI on shelter lowest since 2023, along with, and I want to introduce this conversation, AI being deflationary. What are your thoughts on that going into 2026? And then transitioning back to the Fed, do you think everything you said, along with the macro trends, along with AI, is enough to really justify these rates coming down? Because there's no need to be that restrictive if we're actually at 1.5% inflation.
Yeah, can you just bring that chart up one more time for just a second? So you can actually see that shelter is at the level that it was pre-pandemic in terms of total inflation, right? So on a nominal basis, if you look at 2018, 2019, 2020, we weren't screaming about inflation, yet shelter was rising at 3% per year, right? Rent, look at the price of rent. Rent was around that same amount, 2.5% to 3%. What's going on? Rent prices are actually below now. So if rents are coming down, what do you think is going to happen? Rent actually feeds into shelter CPI eventually because of owner's equivalent. The way that they do owner's equivalent rent is still, in my opinion, really dumb because you can actually see, but they basically survey people and saying, how much do you think you could get for this house, right? Everyone overestimates what they can actually get. The point is the rent, because it's staying so flat, eventually all of these people, when they get surveyed, every month they're going to keep getting, oh yeah, maybe it'll be lower. Oh yeah, maybe it'll go lower. Oh yeah, maybe it'll go lower. And then shelter will eventually be at 2 and then probably at 1 by 2028. And because of that giant anchor, you got issues. You got issues.
Okay, so if you take that to its logical extreme, that means we should be seeing significant progress on inflation next year. Maybe that's why we got that 9-3 vote from the Fed at FOMC. So then what does that mean for the stock market?
So unfortunately, this is where, while the Trump administration did do a good job on one part of the economy, which is working on, getting shelter down via deportations. Like I said, that's a political thing, whether you agree with it or not. On the other hand, they're really kicking themselves by doing this tariff thing, right? So the tariffs are, no matter what anyone says, tariffs do cause inflation, right? and it could be theoretically, it could be a one-time thing. I know some people argue that, you know, the tariffs are inflationary, but then it's like, hey, listen, you've got a one-time rise, and then but you've got this, you're doing this at a point where the most important thing is going to be that inflationary number that shows up right now in your face. So they could have done the deportations and then worked on the tariffs after inflation was already down. But they kind of, you know, and Besson actually mentioned this a couple of times. They had a choice. They said either we could do this or we could do that. But they were scared that like the Washington blob tends to come for it. So right now, when Trump came in, he came in with a mandate, so he could do a lot of things. Then Washington has all these mechanisms where things could slow things down in terms of getting things done. So his logic was, if we don't just do everything all of a sudden, regardless of how, regardless of what the fallout is going to be, then it may never get done. Right. So instead of trying to do one and then the other, they just said, screw it, throw everything. And right now, I think we're seeing on one hand, core goods inflation starting to rise a little bit. Right. Which is why we're getting the 3%, like the 3% ish inflation rates. I believe that if they hadn't done the tariffs, we'd probably be at 2 right now.
Yeah. Yeah.
You know,
we were talking about that in April. A lot of us were saying, like, if they had just waited, like inflation would fall off a cliff and then they could do the tariffs, but then inflation would be so low. But they went full throttle and they kind of got it done. I mean, at the end of the day, 2.6 is not horrible, right? It's not like 3.7 or something. So it's done now. And now it's just a question of how bad is the impact.
Yeah, now the question is also like, how much of those tariff impacts on core goods going to basically stabilize throughout next year, right? So a lot of the talk basically from Washington and a lot of think tanks is that the reason why we haven't seen necessarily inflation persistent in like core goods right away, because, you know, it's like there is a lag. So businesses, they front loaded a lot of their inventories, and now all those inventories are cleared out. So now every time they order new stuff, like the whole thing with Nike, they're paying the tariffs, right? And those tariffs are now going to be put into the cost of the products that they sell. You know, the other problem that I was not a big fan of, it's like they didn't do targeted tariffs. They were way too broad with them. And there was like tariffs on coffee. It's like, dude, coffee is in your face. You know, tariffs on things that can't be grown here in the US. Don't put tariffs on things and restriction on things that you know that are going to be in your face items. And I think the Trump administration now is walking a lot of those things back. But it's like, y'all didn't think that, you know, causing inflation in like the grocery, the supermarket is going to be in your face. If there's one thing that people notice all the time, it's two things: gas prices and grocery prices. The mandate should have been, how do we get gas prices and grocery prices down across the board and then keep them down? And they did a good job with some parts. Like, so if you look at the price of eggs have come down significantly, right? But now you're running into the beef situation, and beef is not necessarily just because of tariffs. I think a lot of people think that, you know, it's tariffs are causing beef prices to rise. Not, there's other factors that are in there. But once again, if you go to the grocery store and you see prices of things higher than what you saw them a year ago, 2 years ago, you're not exactly happy about it. And then now you also have utilities, but utilities you're just going to have to deal with because, you know, like data centers and AI is kind of powering the economy right now. So, you know, I'm sure that the administration is probably working on creating some frameworks around increasing the amount of energy production in the country, so that this way that we can actually grow the economy with all this data center build outs, while at the same time preserving some level of price stability with electricity prices. Unlike that idiot Bernie. I hope that dude
hold on. We haven't watched the video. I got to pull it. I haven't seen it yet. But for those that missed, I actually haven't watched it yet, but this thing went viral last night. He's definitely not a fan of the data center world. Before we play this video real quick, so two things. Number one, Nike's down 4%. So Street's not liking what they had to say. Number two, we got a pretty tragic headline right here. Plane crash, 7 people killed in North Carolina. Gregory Biffle, former NASCAR driver, has also passed away. This family just released a statement as well. and he did indeed pass away. So rest in peace to the people that died on that plane crash, but we just got that headline as well after hours. This was what Bernie said 2 days ago.
In unexpected ways. Data centers. Built by big tech companies like Oracle and Meta to service the AI boom, these massive facilities will house computer servers used to train AI models like ChatGPT.
Data center demonstrations. Dozens show up to protest at a Port Washington Common Council meeting tonight.
This is a $15 billion behemoth built in partnership with Oracle and OpenAI. All this investment in a town of about 13,000 people, 45 minutes north of Milwaukee, must be exciting, right?
It is insane how many people are distracted, can't sleep at night.
These data centers are water guzzlers, and this one is being built right next to Lake Michigan. Studies show a single data center facility uses 3 to 5 million gallons of water per day, the equivalent of an entire town. Research shows that in areas near AI data centers, electricity costs have jumped over 267%. These are passed along to communities through higher electrical bills. The companies say this data center will create thousands of jobs, but that's not what actually happens.
Members of the Port Washington community are really frustrated that they're being ignored.
I don't see anything in it for Port Washington. The jobs aren't going to be given out to Port Washington residents.
The jobs that data centers do create are mostly temporary construction jobs. Permanent jobs are usually in the dozens and not in the thousands.
Everything on 125 feet of both sides of us will be destroyed.
Even worse, the AI software these data centers support is being used by these exact same billionaires to automate jobs and drive up their already sky-high profits. The question with AI is not whether it's good or bad, but who benefits from it. Right now, it's not the workers, it's not the communities where they're being built, it's the oligarchy.
What kind of compensation possibly can you give me to destroy everything I've loved and lived for?
What do you think is wrong with that argument being posed by the Bernie team?
I think the narrative that people are saying that electricity prices are higher is absolutely true, but they happened mostly under Biden. Okay, and the reason why they happened under Biden is because we had this massive wave of natural gas spike because of the Russia-Ukraine war situation, which now is declining, right? The data center build out is true, but at the same time, a lot of the data centers, the newer ones that are being built out, they're coming with their own power plants. It's not necessarily like the thing that this guy's trying to put up. Where was it, man? I'm trying to bring up the prices for electricity. There was actually a chart that showed that, where if you see the electricity prices under Biden, even prior to all of these data center buildouts, it was like this. And then now with the Trump administration, it's kind of flatlined, right? So a lot of these people, they're like, don't build more.
Is this the chart? This one right here?
Yeah, exactly. So data centers have taken off, right? But look at the price of electricity. This wasn't just all data centers. This was a lot of it is natural gas prices that are underlying the prices.
No, that's actually a really good point. Like, yes, it's the highest in 2025, but it's not like it was declining in 22, 23, or 4.
There's a better chart, man. Let me see if I can find it real quick. Electricity.
And I agree with you, but I do think there's going to be pushback from the public if they don't know what the ROI is on the data centers. And if they just see like AI imagery, I think that's going to still be an issue.
Yeah, here's the actual chart that we should probably take a look at. So you see this giant move up. That's the nominal price. Okay, so the nominal price is the numerical price that you pay. So look at the numerical price. Numerical price has been going higher and higher, right, for the last few years. So this was prior to all the data centers coming in and building it out and everything else. So a lot of this spike, the way that like electricity prices here in the US works, especially because it's so regulated, is that when you have all these inputs like natural gas and everything, the price spikes. Now all of a sudden the energy companies have to go to their local municipalities and say, hey, we're going to raise rates by X amount of money, and they have to get approved. And a lot of the municipalities, because they see the cost, actually approve those increases, right? And when they approve those increases, they're sticky. They're not going down. And now natural gas prices are starting to like level off, but those price hikes are kind of built in. So if you just look at this in terms of like real price and inflation, it's the same price. It's literally flat. You know, I mean, there is a little bit of an increase, but it's not a lot. And so I think this whole notion that, oh, just because they're building a data center, all of a sudden, like natural gas price, I mean, not natural gas, like electricity prices have spiked. It's like, yeah, I don't know.
Now,
if that's the
what
whole
is
story.
your response? What is your response to someone saying, Chris, you're long Meta and Nvidia, and that's why you don't think it's that big of a deal?
No, that's beyond the point, man. That's beyond
because
the point.
if we don't have the data centers, your AI stocks don't go up, right? So we have to.
What are you talking about? If anything, the power constraint actually works in NVIDIA's favor, because now you're saying, oh, guess what? We're going to limit the amount of electricity. Okay, guess what happens? Everyone buys Blackwell chips now that are way more efficient. Everyone has to just scrap the H100s. It actually works in NVIDIA's favor, because now the upgrade cycle, which was a 5-year cycle, just got turned into a 3-year cycle because the old GPUs have way less energy. Way less energy efficiency than the new ones. If anything, NVIDIA should be pushing for less electricity, and saying, screw it, just upgrade. Don't pay all this money to these old H100s, right?
Well, I think that's a fair point. Here would be my retort. My retort is even simpler. Oh, you don't want data centers because electricity prices are going up? How about US GDP at 0.7% year over year? Oh, yeah. That's not a good economy? Guess what? We got to invest in data center, because the data center CapEx is all of our GDP, or at least a good chunk of it, 50% of it since 2023.
Yeah.
So, I mean, when we talk about jobs, I mean, yes, your electricity bill is going up, but if jobs, investment, the overall economy collapses, or not collapses, but significantly stagnates, I mean, there's also a ramification to that, even if it's not as immediate as your electricity bill jumping up. Yeah, and it's not like it's an easy way to resolve this, but it's the reality of it.
Yeah. I mean, this has always been one of the challenges with the ideologies between the Democrats and Republicans, where the Democrats have a lot, they're more like socialism light, and the Republicans are sometimes a little bit like fascism. Not fascism light. That's not the right thing, but they're more like progress at all costs light. And sometimes each side, they kind of need to like turn down the rhetoric a little bit. Like the Republicans should probably be a little bit easier with regards to, hey, instead of just tax cuts all the time, let's kind of figure out a way to help the bottom lift up a little bit, And then the Democrats like, hey, can we actually like develop this country and actually grow ourselves? Not just, hey, let's steal from the billionaires and give to the people at the bottom. And then create like an entire class of people that don't want to do anything. Like, we don't, like I said, we're at this point where the fringes are too strong in their ideologies, and it really hurts the people, because instead of getting like good policy over a long period of time, what we're seeing is this massive swing in pendulums in each direction with every administration that comes in, right? Where when the Democrats come in, yeah, go ahead. Sorry.
Do you, and I agree with that point. Do you think that Google and Nvidia and Meta and these companies, they just pay the tax? Like, what if it's a couple billion extra per year, right? It's not crazy for them to pay for the increase in electricity, either through a tax or in whatever subsidy, or
they're building power plants themselves for the data centers. Like if you look at the Hyperion project, right, that they have it in Louisiana, right? So Louisiana, they're actually building electricity on site. So they're not drawing from the grid. They're actually going to have their own power plants. And it's with this company called Entergy.
While you're pulling that up, Meta is developing a new AI image and video model, as per the Wall Street Journal. So more electricity price increases for these AI thumbnails that Steve puts on his YouTube videos.
Yeah. Take a look right here. So Entergy's built $1.2 billion 500 kilowatt transmission line to serve Meta mega data center, right? So they're building the infrastructure that's necessary right here. Entergy had proposed to construct a 1.5 gigawatt natural gas plant in Northeast Louisiana.
No, but that's fine. But the
right.
Immediate increase for someone in Louisiana that happens before this takes place, like, isn't there a world in which Meta can just like give a rebate for that to the government and the government subsidizes it? Like it can't be that much money, but it's not going to be like tens of billions of dollars.
I'm not.
Right?
I'm kind of confused right now. What you're saying? Like you're
Like,
saying
okay,
that
so
to deal
Meta's
with
data
electricity prices. Are
yeah,
you saying
so
that? Yeah.
let's say Meta's electricity or the power plants they're building aren't live yet because it takes time to build them, but their data centers are live, so they're using the public infrastructure, which is raising prices.
So how could the data centers are not live though?
Well, there's got to be some data centers that they're connected.
No,
to
some
right now.
data centers are live, but the infrastructure is being built out right now. It's not like you could just
So
pop
my
on
point
a
is
data center connected to the grid.
The people in Oregon that are immediately seeing their electricity prices go up, that are happening because of data centers that are using Oregon's grid, not like Meta's.
I think that's the falsehood that we're seeing right now, that the data centers are causing the spike in electricity. I'm telling you, it's the price of natural gas that shot up, and utilities raised prices during that period of time. Like, utilities are regulated, right? Like how much you can charge. So the thing is, in order for you to get that increase, you actually have to justify that increase, not just, hey, guess what? Data centers are using more. It's not as simple as supply and demand, or it's like, oh, demand went up, let's start raising electricity prices. That's not how it works, So
are you saying there's zero impact from the data centers on electricity prices because of the regulation?
I think that there's probably some of it, because the draw on natural gas and everything else to power the data centers could theoretically raise the price of natural gas, and then the price of natural gas goes up. Now all of a sudden utilities are like, hey, listen, the cost of that input fuel just went up for us, so now we have to pass that along to the consumers, right? So that's why you've got utilities that are dealing with that whole thing, right? So the more natural gas that we use here in the country, the price of natural gas goes up. That means that the input costs to the power plants go up, which then the power plants then go to the grid, the municipalities, and say, hey, listen, we're gonna have to raise prices, And if there's demand, then the utilities will say, listen, we are gonna build a power plant to meet the new what is it called? The new demand picture. Like here in Georgia, they just built nuclear power plants like Vogtle 1, 2, 3, and 4. And it's, this is like a 20-year project to build out this thing. It's not like right away that it came around. So I think this is where I think each side is kind of just jockeying to not each side. The Democrats are just utilizing the data centers and everything as a scapegoat. I do think that there's some case to be had with regards to like the water usage and how much is actually being used, but a lot of it could be actually turned into like recycling, where it just gets recycled internally rather than just boiled off all the time. But like I said, I don't know the unit dynamics of how much water is actually being used by the data centers, but the data centers this is not where you take water, you put it into data center, and data center just consumes water, right?
No, I think you're right on a lot of levels. I do think it's hard to believe that electricity prices are not going up because of data centers, and it's only the natural gas argument. Maybe it's not 100%, as you said, and obviously it was increasing before in 23, 24, so it's definitely not a binary thing. But the point of the public backlash against it, that's what I'm saying. Even if Meta was like performatively going to put $3 billion into Louisiana's government, local governments, and say, hey, subsidize electricity bills, like maybe that saves them the headache. Because if they don't do that, and then here's the video that Bernie posted yesterday, this is what you end up doing.
Thanks for joining me. Let us be clear. AI and robotics are the most transformative technologies in the history of humanity and will have a profound impact on the lives of every man, woman, and child in our country. Just a few points that we need to be thinking about. One, who is aggressively pushing these technologies? Well, surprise, surprise. It happens to be the very wealthiest people on Earth.
Can you pause this for a second?
Jeff Bezos.
Okay. Who's slowing this down? Well, guess what? China, probably. I mean, this guy is like a mouthpiece for the socialists, like the CCP. What if we don't actually invest and take the lead on this? What's the alternative? The Chinese get ahead of us. And if they're ahead of us, then what happens? They win the next decade of innovation. Do we really want that? No. Sorry, Bernie. Go ahead. Finish your talking.
I think it's a big point. If we don't want to ship NVIDIA chips to China and we want to stop innovating AI in America, I mean, you're going to have some issues.
Mark Zuckerberg, Peter Thiel, Bill Gates, and other multi-billionaires. So here is a very simple question I'd like you to think about. Do you believe that these guys, these multi-billionaires, are staying up nights worrying about what AI and robotics will do to the working families of our country and the world? Well, I don't think so. I think that these very, very rich men want even more wealth and even more power. And for a whole bunch of reasons, that is very dangerous. Number two, what will AI and robotics mean economically for the working class of this country? Well, don't listen to me. Listen to the people who are developing those technologies. Elon Musk recently said, quote, AI and robots will replace all jobs. Working will be optional, end quote. Bill Gates predicted that humans, quote, won't.
Elon saying that, by the way, is not not really helping his case to say that AI is a good thing. But yeah, that's his argument.
Won't be needed for most things, end quote. Dario Amodei, the CEO of Anthropic, warned that AI could lead to the loss of half of all entry-level white-collar jobs. Question: if AI and robotics eliminate millions of jobs and create massive unemployment, how will people survive if they have no income? And I don't want to break the bad news to you. I know it won't shock you, but very few members of Congress are seriously thinking about this. Three, something I worry about a whole lot, and that is that millions of kids in this country are becoming more and more isolated from real human relationships and are getting their emotional support from AI. Think for a moment about a future when human beings are not interacting with each other and are spending virtually all of their time with devices instead of people. Is that the kind of future you want? Well, not me. Needless to say, there is a whole lot about AI and robotics that needs to be discussed, needs to be analyzed. But one thing is for sure, this process is moving very, very quickly, and we need to slow it down. We need all of our people involved in determining the future of AI, and not just a handful of multi-billionaires. That is why, for a start, I will be pushing for a moratorium on the construction of data centers that are powering this unregulated sprint to develop and deploy AI. This moratorium will give democracy a chance to catch up with the transformative changes that we are witnessing and make sure that the benefits of these technologies work for all of us, not just the wealthiest people on earth.
A moratorium of stopping data centers. Do you think that has a chance to legitimately get passed in this administration?
No, I don't think so. Not this administration. Definitely not. You know, the power, the economic benefit that the U.S. has with regards to AI is it's going to be decade long. It literally is entrenching us into the global economy. I mean, if it were guys like Bernie in charge, bro, we'd still be in horse and buggies because we'd be like, oh man, what are we going to do? All the jobs that are going to be go because of cars, you know, oh, we need to stop computers because then all the transcriptionists and the people who type, they're going to be out of jobs. Like, dude, come on, you can't do that. Progress moves. Eventually people will learn how to work with AI, develop AI. There's economic benefits that comes with productivity boom that comes from AI. You know, I'm seeing it myself in the hospital system, and I can give you some examples of AI literally saving people's lives. But guys like Bernie, they don't want to hear that because they're like, oh, but what about all the people that lose their job? You know, and it's like, dude, don't try to slow down progress just to slow it down. If anything, you should be creating legislation to help people adapt to this sea change, right? I think there should be more money spent on retooling people to actually work on things that we need in order to adopt AI into our day-to-day existence.
I don't think you can fight it. You can't say we have to slow it down. You can say we have to be cautious of the risks, especially when the Wall Street Journal says OpenAI is trying to get valued at $830 billion. My goodness, they are pushing the valuation there. But when you have that type of exponential progress, you cannot stop that, and it's a losing challenge to try. But you can't have more cautious regulations. But a full-on pause, I mean, it's not even practical to imagine that.
Yeah, the challenge is. I'm probably going to get some hate comments in the comments section, but I'll say it anyway because it's the real thing. So I think the Trump administration has done a really bad job in securing the long-term viability of all of the progress that they have made so far. And I think they might get creamed in the midterms, you know, regardless of how technically a lot of the stuff that they have might benefit us in the long run. if you just have a bunch of socialists that take over in the midterms, then you got a bigger problem on your hands, because then you basically become a legislative lame duck, right? Where everything that you do or say is going to have a problem. So right now, if you look at Trump's approval ratings, they've gone downhill significantly, and some of the decisions that they've made are very, very short-sighted. And I think those short-sighted things are probably going to play out to the detriment of the Republicans going into the midterms, in which case, if you end up flipping the House, that's a problem. There's a chance that the Democrats could end up with a majority in the Senate. I doubt it, but if they do, but then you've got the administration on one hand and you've got the Congress on the other, and it's literally like we saw during Trump 1. Hey, let's just sue Trump. Let's impeach him for walking down the street the wrong way.
Well, to your point, and I don't know how accurate this poll is, and I'm sure there's going to be many conflicting polls, but AOC 51-49 against JD Vance in a hypothetical 2028. My personal opinion, just putting my personal opinion out there, I think JD Vance would wipe the floor with AOC. That is my personal opinion. But there is a world where Democrats win the midterms and this data center argument, AI progress needs to slow down, the rise of socialism. And you could have, who knows, an AOC that makes it much more competitive, potentially wins. Yeah, they're going to redo everything from the Trump administration.
To me, it looks like, to me, it's all about the economy, right? As long as the economy is good, whatever the political party in charge is will end up getting the accolades. And if the economy goes down south, you're going to get the blame. That's just a normal part of the political cycle. So the Trump administration really the other thing is Trump doesn't have to worry about running in 2028 again, right? Like that's on JD's theoretically. So now that's on JD right now. So the challenge is you got to take care of the base, man. You got to really help out these younger people, and that's the problem that the administration's really running into right now, which is they're really running into challenges with the youth vote. The vote that really pushed them over the edge, they're losing them. So hopefully they get around to getting some of that back throughout the next year. So in my opinion, I think the administration is going to do everything in their power to try to flip their narrative on inflation going forward. So everything that they're gonna try to do over the next 12 months is going to be centered around getting inflation to come down. So yeah.
All right, couple other topics. We'll talk about NVIDIA as well, but some super chats. Gallon, thank you for the $20 super chat. Will Tom Lee and Sam Altman flee the country in 2026? Well, if OpenAI can't pay their bills and BMNR goes to $5, maybe that happens. Icy, thank you for the $20 super chat. Chris came on for like 5 minutes and made so many great points. BTW, that maintenance issue he pointed out was making me consider Home Depot leaps. JK. But that is a big point. Like having to maintain a house is not the easiest thing in the world. And then Go Falling Knife, thank you for the $200 super chat. That is very, very, very kind of you. Thank you for being here. And thank you for the $200 super chat. Oracle Blue Owl, Oracle OpenAI, NVIDIA trading at 3-month lows. What is your take on the AI trade right now?
So everyone is looking for a reason to pop the bubble, or at least the perception of a bubble. But like in the past, the only time you're at the apex of the bubble is when no one thinks that there is any sort of downside. Right now, I feel like everyone is already forecast. Like I feel like for the last year, including myself, we've been calling the bubble way too early. And then every time, like, oh, look, the bubble is here. The bubble is here. These companies just come out with some new shit that like innovates the crap out of things. And it's like, wait a second, maybe there isn't a bubble after all. So I think we're at the point right now where I do think eventually we do get an AI bubble, but I don't necessarily see it right this second. Am I worried that eventually NVIDIA's chip dominance is gonna have a problem? Yeah, I do think so. I think I'm still in the camp that the ASICs companies are going to do everything in their power to try to diversify away from having a uniparty monopolistic NVIDIA. So that's why if you look at, and I think this was actually the bigger news that people need to worry about if you do hold NVIDIA, by the way. I'm not saying AI, but did you see the news with Google and their thing with PyTorch?
Yeah, going after
that is a much bigger problem for an NVIDIA than people think, So that's something that I would say is on my watch. But as of right now, it's not necessarily something that I'm like, oh my God, sell all NVIDIA right now, But like I said, I'm keeping my eye very closely on it, because if there is any traction on that, we could see a very similar situation to like the OpenAI thing, where people kind of just thought Google was, just going to sit there and die. And all of a sudden Google comes out with something and it's like, wait a second. So the perception on AI itself could still be growing, but the perception that NVIDIA is going to be able to maintain a very strong leadership position in the chip segment, if that takes sort of a shift lower, that just means that the multiples people are willing to pay for NVIDIA might actually shrink a little bit, in which case, price targets that are kind of like a little bit on the aggressive side for 2027 and 2028 could be dialed back a bit, in which case NVIDIA is more likely to be a fair value right now than undervalued, So that's my thesis on NVIDIA. But
to your point, here's some coverage on that software advantage argument for Google.
Google's chip challenge to NVIDIA, it's moving from hardware to software. The main knock against those custom AI chips, TPUs, is that they're hard to adopt. NVIDIA's advantage is its ecosystem, so that's its chips and its CUDA software. If Google can crack the software and the adoption piece, this becomes a very real test for NVIDIA's moat. So Google's TPUs, they started as an internal tool built to run Google's own AI as efficiently as possible and optimized around Google's own software. Now, that worked really well inside of Google, but as the company started selling these chips to outside customers, that created friction. TPUs were harder to drop in because they required extra engineering work. NVIDIA, by contrast, has CUDA. That's its software platform that is deeply embedded in how its AI is built and run, making NVIDIA the easier default for pretty much anyone building. Now, Reuters first reported, and a source familiar confirms to me, that Google is now trying to fix that with its own initiative, Torch TPU, which is essentially trying to lower the software and engineering barriers that have held adoption back. So this doesn't mean that NVIDIA is about to be displaced, but it does change the stakes. The AI race, it's not just about peak performance anymore, it's about margins and scale, and that is where the real pressure is starting to build. So there's Google.
Makes sense. That's a pretty big argument to challenge NVIDIA versus just TPUs in general.
Dude, the margins that that NVIDIA is making right now on those chips is massive. 75, I think 80% gross margins on their stuff. It's crazy. For a hardware company, it's pretty insane, right? So the problem that you run into is if Google wants to undercut them and say, hey, listen, we'll sell it to you in the software for cheaper, the value proposition for a lot of these hyperscalers is, wait a second, on one hand, the market is scrutinizing us for our AI spend. We need to cost rationalize. As much as we love using the solution from NVIDIA, maybe there's a possibility that we kind of step back a little bit from the NVIDIA ecosystem and try to diversify away. I mean, it's already happening. Amazon with their Trainium line, Microsoft has their Maya stuff. Meta has their,
again, this wouldn't demolish NVIDIA, but it would definitely say that 25 times next year's earnings is not dirt cheap.
Yes, absolutely.
So
Absolutely.
Targets might go down from 275 to maybe 230, which means it's more fair value at 170.
Right, exactly. So I think that's the real challenge. And remember, it's all about narratives, right? Like people thought Google was dead and they were like, oh yeah, 16 times forward earnings it's normal for them. And then all of a sudden they release Gemini 3 and everyone's bullish on Google again. And it's like, wait a second, I'm willing to pay 25 times next year earnings for Google. What was it? It was just a narrative flip, right? Where people thought that one company was dead, another company was the king. And then now all of a sudden people realize that maybe Google isn't dead after all. So it just goes to show that a lot of times, especially with analysts, you can have this great thesis based on today's numbers, but then some new technology comes out and something new comes out, and all of a sudden your thesis goes completely out the door, and you gotta change it and go with it. You can't be too focused on that. So yeah.
What are you thinking of Broadcom and Oracle right now? Are these buys to you?
Oracle, no. Oracle, hell no.
Why?
Like, Oracle's. No? Okay. I don't think that there's nearly the amount of value in doing all of this AI data center build out and then renting all the compute out. The margins on that, in my opinion, are probably super low. So when you're taking on all of this debt and then you're building this margin, which probably will grow your top line significantly, but not necessarily add to your bottom line, but at the same time load you up with a lot of debt, it's not exactly the ideal business that you want to pay a huge multiple for. So
What about Broadcom on this drawdown?
Broadcom's a little bit different. Broadcom's a little bit different in that I do think that there's value there. It's just I'm not so sure like their valuation is that great right now. If you just look at the valuation on Broadcom, it's pretty insane. And so I'm not sure if they're able could deliver that much more incrementally.
Yeah, this went down from 420 now to 320, but still
Yeah,
trade.
Yeah, this was what I was talking to Sam about, like when Broadcom earnings were coming out. While their numbers are good, it's just their valuations got really overextended. And so any narrative flip on AI possibly not necessarily being as crazy profitable could theoretically, see this company draw down faster. And then the challenge is that look at the chart on Broadcom. Look at this real quick. Wait, I'm showing the wrong screen. Sorry. Let me just share. There you go. Look at the chart on this thing. Okay, just rocketed higher all the way to here. The Broadcom literally started here in January, and since then, the expectations have just gone insane. And so, if you look at them on their forward EV to EBITDA, right here. This is their EV to EBITDA right now. Literally went from right here, the trading range around 15 to 18, right? All the way up to about 57. So the expectations just grew exponentially. And then if you just look at this on a forward basis.
But they have been executing against those expectations.
Not 100%. But the challenge is when you execute flawlessly, the expectation is set higher and higher by the market every single time. And so what ends up happening is if you're expecting a company to maintain that kind of growth, if they're even slightly showing weakness, people will sell it off right away because they're just like, oh, the trade is over. So the fear creeps in very quickly. So if you see this, like October 30th, their forward EV to EBITDA was 35. Now it's calmed down to about 24. So you can see that drawdown, but it's still elevated relative to their history. And then when you layer on something like NVIDIA, let me just do Broadcom, sorry. Broadcom, ABGO.
Broadcom is about 15% of Nancy's portfolio as well.
Yeah.
She ends out the year. Nike's still down after hours, folks. This one continues to get hit, now down 6%. The call, I think, has started, but it's down.
So now if we look at Broadcom, right, versus NVIDIA, look at this. Broadcom was all the way here at 36, and now it's at 24. This is on a forward basis. NVIDIA is cheaper than Broadcom on a forward EV to EBITDA basis. So the question is, who do you want to be with? Do you want to be with the market leader, or do you want to be with the possible disruptor? I don't know.
Do you have any thoughts on Micron after those earnings?
Yeah, I think people really missed the RAM piece of it, and so I think we're just catching up on that. So I didn't do as much research on it, but the amount of demand there is for thank you, honey, for Broadcom. I mean, not Broadcom, for Micron's DRAM. The demand is off the charts, which also means that the demand for the GPUs is off the charts.
Yeah. So that's the takeaway. I mean, they had the best quarter since NVIDIA on those earnings.
Yeah. I mean, there's only 3 players in the DRAM space. The only problem is DRAM is cyclical. So you have to be very careful with that, right? There's SK Hynix, there's Samsung, and then there's Micron. So the challenge that you run into is if the AI growth narrative kind of slows down and you don't need as much DRAM, then,
But again, the way they But they also, the way they increased guidance makes it feels like that's not happening. Like every time we say, all right, it's going to it's like maybe it's another 18 months before we even think that's going to happen, which is the challenge of trying to time. I mean, like, what are your updated thoughts on Burry? And, you know, he thinks next year everything collapses. That's why he has those 2027 shorts. Like, do you think next year things could legitimately collapse, like NVIDIA to 100, like stuff? Do you think that's possible?
I think if the narrative flips, then yeah, absolutely. You know, everything, the market runs on narratives rather than just running on fundamentals. So if you're too indoctrinated into the thing that's like, oh, I'm just going to be straight up fundamental investor, you'll miss out on upsides, but you also miss out on downsides. And it's kind of the same thing with companies that have good fundamentals, but you know, you're ignoring the theme, you may miss out on that. So I would say the investor who has probably the best track on this would be someone like Chris Camillo. So if you want to basically shadow someone with regards to the AI trade and see where we are in terms of barometer, I don't think I've seen anyone do as much research, at least from the market sentiment point, as Chris Camillo has. And sentiment is one of his major alphas that he's been able to capture a lot of returns because of it. So I would say Chris Camillo probably does a way better job. So if Chris Camillo starts to dump NVIDIA, get out of NVIDIA. I don't know. What's his update? What's his latest thoughts?
He's been buying like crazy. He's been buying like crazy. Like over the past 2 weeks, he's like, all right, keep selling it off. I'm going to keep buying.
Really? Okay. So maybe there's something.
And he's made a lot of money on NVIDIA already. So the fact that he's also in, November 20th. He's also heavy in OpenAI. And he really does think ChatGPT is going to be the leader.
Yeah. I just hope he doesn't become too what's the word? Too biased because of his massive position. I think that's one of the challenges that I have myself as well, where if I own a position, I'll defend it like you said, right? And that I won't check myself. And I think that's a problem because that is how you get massive drawdowns in your portfolio, where you don't check your own conviction from time to time. You know, does that seem reasonable to you?
No, 100%. But I just think Chris is so directional on his swings that if he thinks the thesis is broken, he'll leave pretty quick.
Yeah.
But the fact that he's made a lot, I mean, he was buying calls weekly on NVIDIA, basically from May to July. And that's when NVIDIA was going up $10 every week. So the weekly calls were just like 10x every week on his site. So the fact that he's still holding because he really believes that it's just going to be a big industry.
I think the funniest thing was I was watching his interview with Graham Stephan, right? And he was like, go get yourself a third job, work overnight. If you have to drive for Uber, go drive for Uber, but you need to buy right now. And I was like, damn, like I've never met someone that was, and this was during the throes of Liberation Day. So he was absolutely just pounding the table, man. He was not worried one bit. He's like, I know this is going to bounce back. So he's like, if I have to go sleep on what's his name's couch again, I'll go sleep on his couch. I don't care. And he was buying hard, you know. So.
He absolutely is heavy with conviction. I think I have that clip where he said that. But that's the cool thing about him. It's like he believes this is the best decade for investors because there's not many opportunities where we have a super cycle. And as a result of that, here's the clip right here.
Just letting y'all know that Chris Camillo's blown up his portfolio a couple of times too. Just saying. You know? But that's probably what's also keeping him humble in his positions. You know, so.
What should the average person do with this information and with everything going on in the market?
Either don't do anything, or if you are going to do something, I would be figuring out whatever you can do to get a second or a third job. Start driving Uber at night, start washing cars on the weekend, start flipping garage sale merchandise. I don't care what you have to do, whatever you can do to make a little bit of extra cash over the next few weeks to next few months to be able to invest in risk assets.
This was back in April.
So that's, listen, for me, I'm investing in Robinhood and NVIDIA and you know, aggressive tech stock, Tesla. You know, like that's what I'm doing with my money. Like you might not agree with my stock picks, but this is the time to to figure out how to find risk dollars in your life. Do it in a way that won't harm your family if it goes wrong. All right. But like find risk dollars. Like just this is the time to maybe like save some money, make some extra money, figure out how to get some extra cash just for the purpose of getting crazy rich later, because you want to have money in risk assets right now for the next 10 years. Like you want to find money to put in risk assets. Guys, I've seen a lot. I have never been more excited to be in the market than right now.
So
like,
how do you
never?
have your portfolio positioned right now? Do you have any cash? Are you still in margin? Like this is,
I'm not with the volatility and when the concentration risk of having a single individual moving equity markets every day.
Yeah.
I mean, what if Trump lost his mind a week ago? Like what if, right? That's
Right.
When we're running scenario analysis, one of those scenarios must be that maybe Trump lost his mind, right? And maybe he's just going to keep going on this and not stop, even if the market's down 50%. And you can't do anything about it, right? So there's a level, you have to acknowledge that as a risk. So I'm not levered, Dave.
Yeah.
And that's
I'm not
rare
either.
It shows you how balanced he is, because although he's saying go get a second job and put money into the market, he's also like, but you could also lose all of it, which is why he embraces the duality of what it means to really be risk on, but also understand the arbitrage of the moment.
Yeah, I mean, he's definitely not the Buffett guy, right? Like Buffett's a lot more reserved. It's like fundamentals. You want to have these singles over a long period of time. That's how you become wealthy. Chris Camillo's like, look, well, I see something, I'm going to swing at it, and he's made a lot of money that way. So I think traders like Chris Camillo can do exceptionally well in this day and age, primarily because so much of the information already exists out there that like investors don't necessarily have to wait for that data to flip in the upside or the downside, so that's where I'd say, yeah, from an investing standpoint, I'd probably follow Chris Camillo on the NVIDIA thing. So since Chris, like personally, if he tells you, hey, listen, I'm selling my NVIDIA, please let me know too, because I'll sell too. Because I know the amount of research that Chris does on his positions. The guy is always tracking his stuff. So like I said, I think the one valuable lesson that I've gotten over the last 5 years, and I'm sure you'll agree with this, because the network of people that you build helps tremendously when it comes to investing. Why? Because there are people that have done really well. They have the inside track, whether that be on sentiment or whether that be on the industry, that can give you the heads up before anyone else can, and give you that edge to be 30 days ahead of the market and basically, either ride it high or get out of it at the top. And I think that's the problem that most retail investors is, that they don't have those connections to people that necessarily give you that insight. And that's why one of the things that hopefully people get from watching you is that insight ahead of every other retail investor, right? So everyone just keep tuning into Amit's thing if you want to know when to sell NVIDIA.
I was talking to Chris the other day, and I'm just really grateful. He got me into Aptronic, and so I'm really grateful for that. I remember calling him. I was like, bro, is this legit? He was like, dude, it's at a $250 million valuation. It's like, I'm putting in a lot. I think humanoid robots are a big deal, and so I'm really grateful for that. But yes, I will let people know when he turns bearish on NVIDIA. I just don't see it based on his conviction around it. I mean,
screw everyone else. Text me. I need to be out in a minute, so you let me know first.
But the reason I'm going to flip that quickly is because robots are going to need a lot of chips. And he thinks there's going to be a lot of progress. I mean, we don't talk enough about robots because this year has kind of been a dud. You've had some valuations for these. It's like we haven't seen it. Next year, hopefully, you see some progress, and that'll be bullish for the chip companies as well. Yen carry trade. Japan's probably raising rates tonight. Do you think people should be concerned about that, or is it priced in?
I think there's a little bit of worry on that, but no. I think we're headed into a deflationary world. Like everything that I'm seeing tells me that we've got massive levels of, disinflation and then deflation possibly headed our way. Energy prices across the globe are down lower and lower. Yeah,
last time there was a yen carry trade. So like, Are you afraid people are short the yen? They're going to have to.
No, I think all of that stuff was people already got burned on that. So they're not going back into that. They're not like, yeah, let me go borrow, especially now that our inflation, the US has lower inflation, according to the newest read, than Japan does. So if you're dumb enough to expect the BOJ to start going back into easing mode again, bro, you deserve to lose your money at this point. So there is no more yen carry trade that you can rely on for that. So no.
I agree. I don't think this is going to be some massive event. I mean, maybe it'll have some, but everyone knows, like in August 2024, no one knew these guys were going to hike rates for the first time in 20 years.
Yeah.
Everyone knows they're hiking rates.
Yeah, I mean, right now you can see Japan's inflation's going up. There's no way in hell that they're going to go in the opposite direction. So why would you want to do a carry trade on a position where you know that interest rates are going up? The carry doesn't make sense if you did that.
100%.
You know, you don't borrow money in Japan and pay 3%. You could just do that here at this point. There's not, the arbitrage is gone. So I don't know what would be the point of it at this point. So
VG, any updated thoughts on this?
Yeah, we just all became long-term shareholders, bro. You know, you ever got into a position, I was like, yeah, we're gonna do really well in the short medium term, and then you got held, and it's like, I guess we're long-term investors now. That's where we are with VG. The thesis is not broken long-term. The thesis is intact. It's fine. But just letting you know that if your idea was, hey, we're gonna get rich in the next 2 to 3 years, we're gonna be holding these bags together. You know, I know Derek posted that he's
excited about it now. Yeah.
He's loaded on BG. The thing is with natural gas, it's known as the widowmaker, bro, because the volatility in natural gas can be to the upside and to the downside. And the challenge is VG in its current situation, they are more exposed to the volatility because of just the way that their contracts are with spot prices. Like a lot of their contracts right now, their short window that they have before they go from commissioning cargoes to fixed tolling, that period is very, very deterministic on Venture Global's earnings. So at some point they're going to go to fixed tolling, but until they do that, the volatility in the stock is going to be up and down. The other challenge, of course, is from a valuation standpoint. Some people are saying, well, long term they have all this debt. What does that mean? And this is the problem that I always have with people. Bro, debt is meant to be taken on, especially with capital intensive businesses. And over time, the debt gets paid and that value ends up going into shareholders' pockets. If there's a company that you want long term, it's like, oh, look, they've got $30 billion in debt. Oh, look, they've got 27 in debt. Look, now they've got 20. Then they've got 15. And what happens the entire time? Your EBITDA and your revenue and everything else is going in one direction. Your debts are going in another direction. And that's where you make money, you know? So it's not hard to see a company that has spent over, at this point, $60 billion on facilities, while they've also spent $30 billion on debt. Eventually, the equation flips from, hey, they've got a lot of debt to, hey, there's a lot of equity with an irreplaceable asset. Like you can't just go out there and be like, yeah, let me go build a natural gas liquefaction facility. You know, takes a long time. So
Nike, by the way, really tanking. The stuff I'm reading here is that on the call, they're talking about tariffs being a bigger issue than people thought. 10% down.
Yeah, whatever. If whatever excuses they want to create, that's fine. Go for it, Nike. Tariffs are not your main problem. Your main problem is that y'all went too woke too quickly and you basically turned brand appeal off. And now everyone else has discovered that there are products that are way better than Nike, like Hoka's and like on what is it called? On clouds and everything else. And so the market that you had captured has basically let people go out and explore other things. And now everyone else is happy with the other stuff. And now you're losing market share. Congratulations. This has nothing to do with your tariffs. It's all about your terrible, terrible marketing that now has screwed you over from being a dominant position to being basically a company that's been disrupted. I mean, is that fair to say? If you you are a brand lifestyle company. If you lose the brand appeal, then what do you have?
Yeah.
Do you think people are like, I'm going to purely buy shoes based on like by what? Just the dollar value? No, people buy things based on how they feel when they put stuff on. You know, otherwise the price. You know, otherwise. Whatever. Sorry, I think I've been.
No, I think you're right. At the end of the day, there's definitely a part of the brand that has been damaged, and they're trying to get that back, and it hasn't worked, at least over the past couple of years. By the way, tomorrow's quad witching. This is going to be the largest ever option expiry tomorrow. 7.1 trillion, 5 trillion of options just on the SPX alone. 800 billion of individual stocks, which could also explain any random price action you see tomorrow.
Yeah. Look at I think the comment right there is like, I'm a brand manager, and Chris is right. Once you lose that brand appeal, bro, it's hard to get it back. It's really hard to get it back.
Well,
I mean, not to mention, yeah. Sorry.
I was like, reputation matters, right? Like, you don't have many chances at a first impression. You have to be very careful with how you conduct yourself. And when you're a company at Nike scale and you embrace ideas that, I mean, the country overwhelmingly went for Trump. There's a lot more people that probably didn't agree with the sports and political intermingling, which they leaned into heavily back in 2016 to basically 2022. It's hard to fix that overnight.
Yeah, and this is where it goes right back to what Michael Jordan said: Republicans buy shoes too. You know,
dude, people give him so much shit for that quote, but he's right. He's just like, I don't want to piss off these people, so I'm not. Yeah. I'm good.
Yeah, you have to protect the brand, man, and that's where you'll lose half the. Like right now, whenever I come on, I have half the chat that hates me and then half the chat that loves me, and I've just accepted that because I realized that the half the people that love me will tune on because they love me. The other half will tune on because they hate me and they want to give me hate comments. So I'm like, bro, this is engagement 101. This works. It's awesome. You know, I'm not trying to sell anyone anything. So my brand is the guy that comes on and says crazy shit, you know, and if you love me,
but literally the first 30 minutes, you'll have all of MAGA hate you in the chat. Mm-hmm. The next 30 minutes, you'll have all of MAGA. We really like Chris. Honestly, this is a good point. And I think it's a nuanced, well-rounded opinion. If
you kind of want to be authentic. You kind of want to be authentic. I think people appreciate authenticity, whether it be in agreement with your point or disagreement with your point. Right. Yeah. So if you're too ideological and just saying, you know what, I want all the smoke, then that's what you're going to get. So it is what it is. We hate Amit, but he has cool guests. Yeah.
Chris will be at the meetup, folks, in New York. So
yes, sir.
It'll be fun. We'll get to see everybody. And
I think we should change the name from Macro Thursdays to Terrible Takes Thursday. Chris's Terrible Takes. I like that. Chris's Terrible Takes. Let's just lean into it, you know? That's what I like doing. And so like there was a time where like all these people, anytime I'd be on Cash Flow Chronicles or whatever, you know, I'd say something that people that disagree would put it in the chat. And so I used to just be like, Allahu Akbar, brother, you know, and just like really mess with them a little bit, you know. I'll be again, blessings be upon you too, sir. So anytime I see a hate comment, I just diffuse it with like something very like something very benign, and it works. So
yeah, I mean, look, you have your opinions and you have to defend them, but the point is, it's good when people can't predict. Like, if people heard you in the first 20 minutes saying that you're blaming the Trump administration for tariffs, they would say, oh, this guy definitely thinks that tariffs are the problem with Nike. And then you give them a left turn and say, no, Nike's woke. There's not the tariffs, even though you just critique tariffs for 20 minutes, which is where the nuance.
That's where everyone has to be, at least from their own perspective, be intellectually honest and just say what they think, right? I mean, otherwise, what do you have? That's the problem, I think, with mainstream media right now. There's no sense in nuance. You turn into CNN, it's like, my name is Anna Navarro and I hate Trump and I'm only going to hate Trump. And then you've got Scott Jennings and it's like, I love Trump. So everything I say will be positive Trump. And it's never a nuanced discussion between the two where Anna Navarro says something nice about Trump or Scott Jennings says something critical of Trump. Like, come on, guys. Like, you gotta be honest with yourself. You can't just carry the water for your own party and then call it a day. Bro. Yeah.
Vlad just came out and he has a take on what Bernie said. He said, this sentiment is exactly why we need to work to give retail investors exposure to private AI companies. People worry AI will take their jobs and give them nothing back. If we don't act accordingly, they will push back harder and harder against AI. Give them a stake in the leading AI companies, and they'll become supporters and defenders. The crypto industry has done a great job of this. You agree with that? You think that's the way to get people on board?
Yeah, bro. Databricks out here doing Series L's and shit. Go public. Let us get our beaks wet too, bro. What's going on? Why y'all trying to hold back all the good stuff? And then they IPO at like the craziest valuations. Like, bro, I want to get in on this at the ground level too. You know,
I got a message from a close friend yesterday, and he said, I've got SpaceX for you. But he said the price is 466 a share. You're buying at 886 billion. Employees just sold at 800 billion. Management fees are 4%. Carry is 20%. And he's like, hey, let me know by Friday. And I'm like, I'll wait for, I'll buy Rocket Lab. Like 886 billion. This means they must be so confident this thing's pumping to 1.2, 1.3 trillion. Because there's no way people are buying this in the private markets without expecting that 40% upside.
I mean, dude, if you look at the total number of users that they have, what is it? How much did they say? How many million people on this
was the take. His take is, he gave me 4 bullet points for the investment thesis. He says, SpaceX is the world's dominant launch provider, responsible for more than 90% of payload. This year, they've launched 163 rockets. The company owns 65% of all active satellites in orbit and has grown to 8.5 million Starlink subscribers.
Yeah.
And SpaceX acquired EchoStar's wireless spectrum for 17 billion, signaling an aggressive expansion into direct-to-cell services.
Yeah.
I mean, look, that's all bullish, but 886 billion. The only reason I'd be buying is to dump it at 1.3, 1.4. Like,
I want to see the numbers. But I will say this: a company like SpaceX could theoretically be on someone's buy and hold forever portfolio.
Oh, 100%. 100%. Yeah.
You know, this is like, you know, Google in 2000s or whatever, where, yeah, sure, Google will have its drawdowns. I'm not saying they're not, but at the same time, if you were to DCA, this would be one of those companies that, you know, from just how Elon is done with execution, could theoretically end up panning out to be a really, really good what's it called? Like a really, really good investment over a very long period of time. You know,
would you buy it when they IPO? Like,
well, I'll have to see their numbers first, just to get, you know, some idea. But then I think I would probably buy SpaceX during a market correction where they get sold off irrationally, right? So everyone looking to buy Microsoft, you don't buy Microsoft when everything is high. You buy it when the market's like, oh my God, you know, everything is dead. And then you have these strong companies, you buy them and you just hold them, you know, and just give them to your kids. Like Google, same thing. Google, you know, Google's not a trading stock. Google's just buy and hold, and you'll do well over a long period of time. So Apple, same thing. So if you just look at the chart of Google, look at the chart of Apple, look at the chart of Microsoft, and do like a 30-year picture, you'll see that they have these corrections, but then it's up into the right business. You know, they're not going anywhere. So,
by the way, Oracle's up after hours. Looks like the TikTok deal is final, and Oracle's getting a chunk of this. I think that's what's pumping Oracle right now.
Is it TikTok science deal for sale of US unit? I'm going to say something.
Don't go crazy political.
No, I'm not going political. I think TikTok is actually going down in engagement.
Oh, that I 1,000% agree with, bro. I thought you were going a different route with TikTok, because there's a lot of political shit associated with that and Oracle, and I think that's also making things a little
complicated.
Confusing. Yeah, very complicated. And then you got the Paramount stuff. I mean, the Ellisons are involved in a lot of shit right now, and I think it's going to be complicated 5 years for them in terms of the media landscape. But yeah, TikTok usage is not like, it can't be as high as it was in the pandemic.
I feel like TikTok is starting to come down, and I think really there's more people and more eyeballs migrating to YouTube than ever before. I've noticed it. The data is actually speaking about it. The competitors are getting into the point where they're talking about it, saying, look, we're literally all getting smashed by YouTube right now. And they're all making these moves like Warner Brother Discovery and Paramount and what is it called? The reason why they're all consolidating is because the juggernaut in the room is YouTube. YouTube is now going to do the Oscars. You see that?
Yeah,
or the Emmys.
They got exclusive rights
You
to it. Dude, do you think Netflix is just like, with all these podcasts they're signing, trying to catch up to YouTube, but they really can't?
Bro, I think Netflix sees the writing on the wall, bro. I think people are getting to the point where they are tired of paying the crazy high premiums that Netflix has to watch 1 or 2 or maybe 3 shows a week, barely. Whereas I would say 30 to 40% of their viewing is coming from YouTube and from other sources. You know, like I asked a lot of people. Yeah, sorry, go ahead.
If Netflix gets Warner Brothers, do you think that even helps them deal with the behemoth that is YouTube? Or
I don't know, bro. I don't know, bro. YouTube.
Because I want to be bullish on Netflix here, but I'm like, okay, they have Harry Potter. That's amazing. But YouTube's a different animal, and they're not getting the constant user-generated content that YouTube has.
I don't know a single person that does not have YouTube Premium or YouTube TV or a derivation of either one. Do you?
No. Everyone I know in my life uses YouTube. I mean, you would have to be pretty disconnected from just news and content in general to be like an Instagram Reel person that gets your news. But most of the people I'm connected with, YouTube is their source.
My dad and my mom watch all their stuff on YouTube. Like my father-in-law, mother-in-law, like they have access to my YouTube Premium, so they don't have to pay the thing. So anytime I sign in, my algorithm is literally these Indian soap operas, you know? I think YouTube, number one, user-generated content costs them nothing. It does not cost paying stars, paying all of this stuff. And the way that they monetize is insane. So I think if there's a case to be had with regards to why Netflix and why these guys are so desperate to why Warner Brothers Discovery is because they are trying to stay relevant at a time where YouTube is eating their lunch.
Put in the chat why you don't have premium, because there are a decent amount of people that don't have premium. And I, like, again, for the people that are using YouTube every day, what is it about those $15 a month that's stopping you? Because it can't be the $15 itself. There has to be something psychological here, especially for investors that
I'll tell you what it is for me.
Disposable income or go ahead.
I'll tell you what it is. And maybe people, I'd love to hear this in the chat. It's the same reason why on your phone, like you will watch ads rather than just buying the ad-free version of an app because you don't feel like you're getting anything tangible, right? You're not getting anything physical. Like I'll go and have a lunch and spend like $40 on lunch, but I'm like, man, do I really want to, you know, buy this one thing, you know, or this, or hey, I'll just watch the ad. I'll just watch the ad. And I have to ask myself.
But I agree with that. But for the people that are on YouTube every day, hours and hours a day, at some point it becomes logical. The $15 is worth more than the time listening to the ads. And you can't say, oh, you're rich, you have $15. Like, come on, dude. $15 a month is not you're rich. Like, there's no way that stands up as a real argument.
I just got a message. Ooh, interesting. I'll talk to you later about it. Yeah.
Right.
Maybe we need to take this offline with. Maybe we need to take the Starlink question, not Starlink, SpaceX question offline.
Dude, I'm not buying. I don't care what offer you got. That shit. There's
I didn't get an offer. I got some data.
Okay.
We'll see.
Well, okay, so let me see in the chat. People are saying I'm cheap. So it's just people being cheap then. That's it. That's the best answer.
Maybe.
I didn't have YouTube Premium for years in college, and once I didn't even know there was a thing called, and then once I got Premium when I was like, I don't know, 22, it's like, why the hell did I for the past 10 years not have Premium? Ad blocker, okay, that's fair. If you have an ad blocker, it doesn't matter.
Yeah, but count the days on the ad blockers. Eventually, YouTube is going to get around those ad blockers. They're right now, their market share dominance, they want to maintain it. So they'll just be like, yeah, you know what? Go ahead. You could block an ad or two here and there. Eventually, if they become too dominant, they'll just be like, sorry, we're gonna make you watch that ad no matter what, you know?
Yeah, but also it's just like, okay, there's a percentage that will have the ad blocker, but it's still a large majority just watch the ads. And I'm like, no one likes watching the ads. Like, no one ever likes watching ads. This is not TV where it's like, all right, we're going for a commercial break, you get to rest. It's like, no, it's in the middle of a video, it's annoying. So it's always surprised me the people that are hardcore, their content is YouTube, they don't pay. And I'm sure there's some stuff I use a lot that I don't pay for, but YouTube's an immersive experience all day that people are involved in.
I'll tell you, one of the things that made me get YouTube Premium is because I like going to the gym, and I like working out and basically listening to stuff. Bro, who wants to be in the middle of a run and be like, do you want to buy tampons? I was like, no.
The ads you're getting? Okay.
I want to get back to listening to my podcast, please. And so eventually I just said, screw it. And
of course, do you think Prime is a big competitor to Netflix?
No.
Or no? Why? You don't think people watch stuff on Prime at all?
I mean, I have stuff on Prime, but I have Prime too. But no, my main reason for having Prime is because of the free delivery, not necessarily because Amazon has some really good shows. I mean, they've got a couple here and there. Like I'm a big fan of The Boys. That's about it, really.
So who do you think is outside
Fallout?
of YouTube then?
Fallout?
Who's the biggest competitor to Netflix outside of YouTube then?
The biggest competitor to Netflix might actually be Disney. Yeah, it might probably be Disney. The reason why is because Disney has Hulu, and Hulu has like, what is that called? Like all of these other things that are in there. So it could theoretically be Disney. Yeah. Not necessarily just Disney itself, but also Hulu. So if you combine the two entities together, you got a pretty big library.
Right.
Yeah.
It's fair. That is fair.
Yeah. So right there, Disney, Hulu. Yeah. Sorry, go ahead.
I was saying Oracle owns about 45% of the U.S. entity of TikTok. That's why it's getting a move after hours. That deal officially. So, dude, these headlines are crazy, right? One thing or another. It's pumping NVIDIA after hours. I mean,
it's narrative
shift,
brother.
4%. Yep, it's a narrative shift.
Anytime you've got these moves in either direction, it's all about the narratives. Now, here's the thing. Zuck is probably watching this and just like, throwing a temper tantrum inside his office right now. You know what I mean? He's probably like, the man who's yelling at the clouds. The reason why is because with Meta, they have so much data gathering capabilities using Instagram and Reels and all this other stuff that TikTok could be a viable threat in terms of taking away market share from advertisers, but they could not have done it by themselves had it not been for someone like Oracle. So if Oracle does a similar thing with their AI ad targeting and is able to do that with TikTok, it could theoretically work out in Oracle's favor. But it all depends on user engagement on TikTok and seeing how much they can actually monetize. Like the monetization engine that is Meta is insane. So I don't know if Oracle can sort of replicate that in the same way, because TikTok is not a public company, so it's not broken out into how much they can monetize. But that's going to be the real question, So here in the chat, here's a question. Do you guys use Instagram more or do you use TikTok more?
By the way, real quick, CoreWeave is joining the Genesis mission. That's why it's pumping after hours. I don't know why that's pumping it. A lot of companies joined that today.
What's Genesis?
It's like the Manhattan Project for AI that Trump launched a while ago. So CoreWeave is part of that. I'm seeing a lot more Instagram. I'm seeing a lot of neithers too. Dude, I made an Instagram account and I still don't have the energy to post on it. Like I can post on X, I can post on YouTube, but when I go to Instagram, I just I know Instagram's an amazing product, but I just get like repelled by it, bro. It's just like
Instagram for me, the only time I go on Instagram is when my wife makes me go on Instagram to watch the reels she sent me. She'll be like, "What are you doing?" I don't know. You didn't check the reels I sent you. Okay. And then she'll like open my phone, open Instagram, and make me watch like like 30 minutes of reels that she's been sending me for like 2 weeks.
No, but
And I have
whenever
to
I
sit
watch reels, I feel like shit after. Like I genuinely feel like an idiot that just wasted my time scrolling through 30 minutes. Of reels.
Yes.
And I've done it many times, but it's not a
doom
good feeling.
scrolling.
Yeah, and
Doom
like
scrolling.
I do scroll on X too, but at least I like I learned something about news or something. Like on Instagram, I just feel like I'm wasting time, and I don't feel better about myself. Like versus with ChatGPT, if I ask it a question, I go down a rabbit hole. I feel like I'm learning more about the world. It's a better experience.
Sometimes I'll be watching videos on X and I catch myself on the doom loop. But the thing is, like, dude, X radicalizes people. All the posts that are on X, it radicalizes you, man. If you have an idea, it's gonna bias you hard in that direction.
Hard.
So,
but that's why they have so much engagement. If you are in a certain camp politically, they will make sure you continue to believe in your ideology. That's just how it works.
Yeah. Yep. So sometimes I do have to like tell myself to just like it's like this self-realization. I wake up, be like, no, get off. You know. But yeah, Instagram is sort of the same thing, but not necessarily to the same degree as X. So yeah.
I've started tailoring my Instagram Reels algorithm to dogs, though.
You have? Why? Are you thinking about getting a dog?
I've been thinking about it. I don't think I could take care of one, but I definitely would love to. I feel like a man needs a dog in his life. Like,
don't get a dog. It's a lot of work.
It's gonna be way too much work. Yeah, it's way too much work.
It's a lot of work, and you're probably gonna be traveling, and it's unfair to the dog to be traveling so much, and then at the same time, like constantly have it, you know, like putting it to like a babysitter or something. Unless you have a friend who's like actively gonna watch the dog every time you leave to go somewhere. Like, yeah. Now I've considered getting a dog too, but I feel like after my last dog like passed away, there's kind of like this hole that I'm always like, man, I don't want another thing to pass away. Like literally my dog passed away in on my arms, and still to this day it's like, oh man, how sad.
It's an emotional, and the worst thing you could do is get a pet and then not actually care, and only take care of the pet when you get the value. Like, no, it's like a kid. You have to raise the dog, the cat, whatever it is.
Yeah,
be involved.
Yeah, and they're expensive too, man. Especially if they get sick and you don't have insurance. I had to pay $6,000 for kidney stone removals for my dog. I'm like, bro, I'm pretty sure I could probably get human kidney stones removed for cheaper.
Yeah, and you have to pay it. Like, you can't not pay it.
Exactly.
I mean,
you know. Yeah.
Yeah. All right, folks. I think that's it for us. I'll be live with Steve in 2 hours. We're doing early today, 8 to 9:30. So I'll be live with Steve.
Enjoy.
Chris, thank you for joining. Chris's Twitter, I'm putting in the chat. Please make sure to follow him on X. And is next Thursday Christmas? Okay, we won't have Macro Thursday next week because it's Christmas, but we will be back.
You mean Chris's Terrible Takes Thursdays? Come on, rebrand, bro.
Do you have a New Year's resolution at all?
Buy a house. Like, me and the wife are really gonna buy a house next year, so I need to get a little bit better with just buy a house. That's the only thing. I've actually been doing all the good stuff. I've been losing the weight. My investing is doing good. I don't know, bro. I think I'm having a midlife crisis because I'm getting to the point where I'm kind of like satisfied with life. I don't have the drive and the ambition to like conquer the world anymore. And I kind of want to get that back, but I don't know how to motivate that. Now I'm happy just going to dinner at my favorite Thai food place with the wife. Like, that's like, if you ask me, Chris, what is your happy place? It's very like woosah and chill and enjoy life rather than let me go out there and conquer the world, which I feel like is kind of sad because I think as a man, your only goal in life is to go out and conquer. And so if you lose motivation to that, what do you really have?
But do you think that's a midlife crisis, or do you think that's just you're getting to a good point in life where it's more stable?
I don't know. I guess the challenge of life is, I don't know. I need to figure out things where I'm challenging myself again. Like in terms of career, Like my boss offered me a promotion. I said, no, I'm good. I don't want to deal with it.
Really? What was it? Was it a big salary increase? Like decently big? Not enough for you
Probably
to.
not. I didn't even consider the salary. It wasn't in my place. Like when I was 20 something, bro, all I wanted to do was like be at the top of the world. Like, oh, I'm gonna do this, I'm gonna do that, I want to do this. And now that I'm in my early 40s, it's kind of like, yeah, I'm cool. You know, I want to de-stress, spend more time with the wife. My wife is working remote now, which is awesome because I get to see her all the time, you know, which is why she went to Chipotle. I'm gonna have dinner with her. So I told my wife, I said the last 10 years we've kind of just been walking past each other. I think now is kind of the time to reconnect a little bit because I work at night, she works during the day. So the only time we saw each other over the last couple of years has been when I was waking up to get on either a podcast or go to work, and she was going to bed, and it kind of turned into she would be waking up in the morning, and that's when I would be going to bed or going to breakfast or something, you know. So I think now our things are aligned back again. So yeah.
No, people definitely don't think you look 40.
Yeah. Chris, have kids. Yeah, we're trying. You know, we're trying. So
that would definitely change up life if you had. I mean, that would give a lot of purpose.
Yeah. I wish the one regret that I have is I wish you guys lived close to me because I was at poker night the other night with my buddies here. I was like, man, it'd be cool to just hang out with Steve, with Amit, with Matt, and all of these guys that I've met.
I have the
online.
solution. I have the solution. Yeah. Me and Steve are in New York. You move up to New York. We'll convince Matt. Matt's not going to be hard to convince. For Amigos in New York, poker night every Thursday. Like
I can't.
We can make it happen.
I can't do it.
Just cut.
I can't do it.
Georgia is Georgia. It'll always be there. You've been there for a long. New York is where you belong, bro. That's your home base.
Nah, bro.
The wife can be convinced. There's no way the wife is gonna.
I can't go back to the caliphate, bro. I'm not doing it. Sorry, I'm not going back to the caliphate. Okay. Eventually, somehow, I will convince y'all to move to Atlanta. I don't know how I'll do it, you know, but I'll figure it out. You know.
That's tough.
Come on,
bro.
George Mandami charging you 50% taxes. Come on, come down here to the great city. South.
Move to Jersey City. You can live close to New York.
Nah, I had my time in New York, bro. I do think that yeah, like I said, I wish there was a little bit more time where we could just kind of just go out and grab dinner and just go to or go to like do a poker night kind of thing. But you know, this is one of those challenges that you not live up to, but as you get older, you're just glad that you met a group of guys who you can talk to, have interest with, and interact with. And like right now, I have friends here that they do not know anything about the stock market. They don't care about the stock market. So every time we go to like events, I'm usually I'm the guy that's just chilling silently listening. As hard as that to believe, Chris is actually a very quiet guy. Like when he's in public, you know.
Yeah.
I only talk a lot because I'm online and I've actually gotten used to speaking to you guys. But when I'm at home, I mean, when I'm with my friends, I'm usually the guy that's just, you know, mellowed out, cool, chilling.
Well, that's the whole concept for the meetups. Is like all of us love to talk about this stuff, but we don't have the community to do it. So
yeah,
that'll be fun.
And I'm sure the people in the chat are in the same position, you know, where you guys wish that you had like a group of friends that you could talk to. And it's like my internet friends. Yeah, my best friend calls y'all my internet friends. Yeah, we're your internet friends. So,
dude, it is kind of wild. Like 10 years from now, we're all gonna look back on like the past 10 years and be like, damn, for 10 years, we've all just been like in the chat talking. Like, you know, like we went through we saw OpenAI get to $1 trillion, we saw OpenAI go to 0. Like we all like experienced it together. Hopefully
we saw Palantir go from 25 to 7 and then Chris selling and then it going to 185. Yeah, we saw that too.
We've been through all these experiences together. It's crazy.
Yeah. Yeah, but see, I think the mark of a true friendship, and this is the last thought before I let you go, is that you can have a conversation like we just had for the last 2 hours and it doesn't feel like a chore versus when you're with people that are quote unquote your friends, but they're more likely your acquaintances. Yeah. Having a 10-minute conversation feels like a chore. So if you find a group of people that you can talk to for more than 10 minutes, I think those are your real friends. You know, and if you have a tough time speaking to someone for more than 10 minutes, but they're your friends, they're not really your friends, they're more like your acquaintances that you kind of have to, you know, entertain for a few minutes, for a prolonged period of time.
Yeah. Well, that's why the meetups are really fun, because you feel like you're friends in the chat. And then when everyone sees it, like when people actually see you at the meetup and they get to talk to you, it'll be cool, you know, because people have listened to you for the past couple of years. So
yeah. How many people do you think you can talk to for more than like 10, 20 minutes at a time?
you know, that's a fair point. I think you, Steve, Matt, it's really easy to do, but it's not easy for the majority of people.
Yeah. Yeah.
You know?
All right. Later.
Thank you, everybody. Appreciate it. Yeah, Chris's Twitter right there in the chat. I will be live with Steve in like 2 hours, and we'll see you guys tomorrow on the market open.
Take care.
Bye, everybody. Have a good one.